Please like, share, and subscribe. Wishing you happiness and good luck every day.
Welcome to The Explainer. Today we're diving deep into the book Prop Trading Secrets by Lien and Etienne Crete. We are going to unpack how a whole new generation of traders are finding their financial freedom not with their own cash, but by smartly using other people's money. So let's just get right into it. For so many of us, that traditional 9-to-5 grind, it just doesn't feel right anymore, does it? There's this huge pull towards wanting more flexibility, more say in our own lives, and definitely more financial independence. And then, of course, the pandemic hit. That was a massive turning point. It completely changed how we think about work, and it really blew the doors open for people to explore new ways to make money. Suddenly, trading from home wasn't just some niche idea. It became a real, legitimate option for thousands, either as a side hustle or even a full-blown career. So, here's our game plan for this explainer. We're going to start with the big picture, this new financial frontier. Then we'll get specific and define what prop trading actually is today. After that, we'll look at the biggest challenges, the tough stuff. Then we'll hear some amazing secrets from traders who've made it, and finally, we'll put it all together into a clear path we can understand. All right, first up, the key thing to get is that we are living through this huge global shift. The old rules for building wealth are changing, and all these new tools and opportunities are becoming way more accessible than they've ever been before. I mean, let's be real. The classic ways to build wealth, 401ks, buying stocks, getting into real estate, they're great for sure. But they all share one giant barrier. You need a lot of cash up front to even get in the game. Most people just don't have thousands and thousands of dollars ready to invest for the long haul. And that's exactly where trading comes into the picture. It offers a way to not just invest for some far-off future, but to actively build up your capital right now and create a more immediate, steady stream of income. Think of it as a powerful stepping stone. The cash you make from trading can then fuel those bigger, long-term investments. Okay, so that brings us to a really specific and honestly pretty exciting opportunity, the world of modern proprietary trading, or as everyone calls it, prop trading. The whole idea is kind of revolutionary because it's so simple. Basically, these prop firms give you their money to trade with. You bring the skill, you bring the strategy. If you make money, you get to keep a huge piece of the pie. It completely removes the number one roadblock for most aspiring traders, not having enough of their own capital to make a real go of it. Now, this is what I find so cool. Just look at the difference here. The old way of prop trading was like this exclusive, members-only club on Wall Street. You had to have the right resume, the right connections. But the modern version, it has thrown the doors wide open. It's accessible to literally anyone, anywhere in the world, as long as you have an internet connection. So how do you get in? Well, the process is pretty straightforward. It's almost like taking a driver's test, but for trading. First, you pay a small fee to take an evaluation or a challenge. Then, you have to prove you know what you're doing by hitting a profit target, and this is key, while following all the rules, especially the loss limits. You pass the test, and boom, you get to trade the firm's money. And here's what those rules usually look like. Most firms want you to make somewhere between an 8% and 10% profit on the account. But the rule that really matters, the one they never bend on, is the loss limit. You absolutely cannot lose more than 5%. That one rule is what weeds out the gamblers from the serious, disciplined traders. And this is the reward for all that discipline. Once you're funded, you get to keep the vast majority of what you earn. We're talking as much as 80 or even 90% of the profits. The firm puts up the capital and takes the risk, and you get most of the reward. It's an incredible deal. But you knew there was a but, right? If it were that easy, everybody would be a millionaire. So now we got to talk about the biggest obstacle, the thing that stops most people in their tracks. We call it the trader's gauntlet. This quote from the book just nails it. The problem isn't always the strategy, it's the pressure. You've got these strict rules, the clock is ticking, and it makes a ton of traders fail. They get a little too greedy trying to hit the profit target, or they take a bad loss and start revenge trading to win it back, and poof, they break a rule and they're out. So how do you get through that gauntlet successfully? Well, you learn from the people who've already made it to the other side. The book features 14 elite traders who cracked the code, and their stories are pure gold. Let's start with a story that is the very definition of perseverance. Meet Vince Koehn. His journey was not a smooth, easy ride. It was a knockdown, drag-out fight. I want you to just let that sink in for a second. Not one failed account, not 10, hundreds. Can you imagine? Most people would have quit long, long before that. But Vince, he treated every single failure like he was paying tuition, learning a hard lesson. And from the ashes of all those mistakes, he slowly, painstakingly built a methodology that actually worked. And the result of all that pain, all that relentless persistence, he has pulled out over $1 million in profits from these firms. His story is just the ultimate proof that, in this world, failure isn't just an option, sometimes it's a requirement for success. Okay, next up, the incredible story of Elise Amores. Her journey is such a powerful reminder that it doesn't matter where you start. She began with just a few $100 to her name. As a single mom, with all the pressure in the world on her shoulders, she took that tiny amount of starting capital and turned it into an absolutely astonishing $8 million. Her story is so much more than just money. It's about pure grit and building a new life against all the odds. Or check out a totally different path to success with Matt Miller. His story proves a really important point. You don't have to be a jack of all trades. In fact, it's usually way better to be a master of one.
See, Matt didn't bother trying to trade everything under the sun. He picked one thing, one specific setup, and he just became an absolute expert on it. He became a specialist, a sniper. And that laser focus allowed him to pull in over $300,000 in profits in less than 3 months. It's a masterclass in the power of specialization.
So when you look at Vince and Elise and Matt and all the other pros in the book, you start to see these patterns emerge, right? These common threads. So what is it they all have in common? Let's boil down all their wisdom into a blueprint you can actually use.
This right here, this is the secret sauce. It has nothing to do with some magic indicator or a secret algorithm. It's all about mindset and discipline. You see Vince Koehn's perseverance. You see Matt Miller's laser focus. But look at the other stuff. A 3 strikes rule for bad days, which is brilliant. It stops one bad day from destroying your whole account. The discipline to cut your losses, because a trader's first job is risk manager. The professionalism to track and review every single trade, which is how you get better. And maybe most important of all, the self-awareness to control your emotions, so that fear and greed aren't calling the shots. This is what separates the pros.
So we've seen it. The path from the daily grind to financial freedom is real. It's not a get-rich-quick scheme. It's a gauntlet that demands real discipline, serious resilience, and a professional mindset. But the stories of these traders prove what is absolutely possible. So the final question isn't, can it be done anymore? The only question left is, what will your trading story be?
All right, welcome to The Explainer. Today, we are diving deep into a massive shift in the world of finance, one that's kicking the doors open for traders everywhere. We're talking about a multi-trillion-dollar industry that has totally rewritten the rules on who gets to trade with serious capital.
Just think about that for a second. $100,000. For most of us, that's life-changing money. It feels completely out of reach, right? It's the kind of capital that could take years, maybe even a whole lifetime, to build up on your own. Now that question, that single question, is the engine behind a full-blown revolution in trading. And today, we're going to break down exactly how it works, who it's for, and most importantly, the critical risks you absolutely need to know about. So here's our roadmap for this explainer. We'll start with how we went from big banks to home laptops. Then we'll get into the new trading audition. Compare the old school versus the new school, look at the massive opportunity, uncover the risks, and finally, talk about what this all means for you.
Okay, so to really get what's happening now, we have to rewind the clock a bit. We need to look at how proprietary trading, or prop trading for short, used to be this exclusive, closed-door club for the biggest banks on the planet.
Basically, this was the ultimate insider's game. These huge institutions were using their own giant war chests of cash to make profits for themselves. You couldn't just walk in off the street and say, hey, I want to play too. No way.
But then, technology started chipping away at those walls. You know, in the 90s, platforms like E-Trade let regular folks get a taste. Then came retail Forex trading. The dot-com boom showed the whole world what was possible. And more recently, the whole crypto and Wall Street bets frenzy just poured gasoline on the fire, leading right to the explosion of these modern prop firms we've seen in just the last few years.
So all of that change, all of that disruption, it paved the way for a totally new model for aspiring traders, one that doesn't care about your fancy degree or where you used to work. And at the very heart of this new world is something called an evaluation challenge. Honestly, the best way to think about it is like an audition. It's a test. Can you make money consistently without blowing up the account? That's all they want to know.
The process looks pretty simple on the surface. First, you pay a one-time fee to get in the door. Step 2, you've got to pass the test. That usually means hitting a certain profit target, say 6%, while staying inside some really strict risk rules, like not losing more than 3%. You pass, boom, you get a funded account. From there, any profits you make, you split with the firm.
And this right here, this is probably the most crucial part. Unlike trading your own money, where one bad day could wipe you out, here your entire financial risk is capped. The absolute most you can lose is that initial fee you paid. For a lot of people, that's a total game changer.
So, you might be wondering, just how different are these new firms from the old Wall Street guard? Well, the contrast is stark. We're talking about two completely different worlds, two totally different philosophies on who gets to be a trader.
Let's just break it down. The traditional firms, they use their own money, they hire you as a salaried employee, and the vetting process is intense. It's super exclusive. The modern firms, though, they're often funded by those evaluation fees we just talked about. They treat you as an independent contractor, and the only real requirement to get in is to pay the fee and prove you've got the skills. Access is global, open to pretty much anyone.
And because of this new model, this has created a tidal wave of opportunity, pulling in a massive new group of traders who, just a few years ago, were completely locked out.
I mean, the growth is just explosive. We're talking more than 1 million new traders jumping into this space in just 4 years. That's an absolutely unprecedented flood of new talent and new interest into this corner of the trading world.
And the scale of it all, it's almost hard to wrap your head around. This new wave of firms and traders has generated an estimated $70 trillion in trading volume. This isn't some tiny niche market anymore, it's a major force in the global economy.
So what's the big draw? Why are so many people rushing in? Well, it gives you a low-cost, low-risk shot at trading some serious money. It opens the door for people who don't have a huge nest egg saved up. It's a true meritocracy. It's about your performance, not your resume. And you can do it from your laptop, anywhere on Earth with an internet connection.
But, and this is a huge but, with all this incredible promise comes some very real peril. This is a brand new industry, it's evolving fast, and it is absolutely essential that you understand the downsides before you even think about paying a single dollar for one of these challenges.
Okay, these points are critical, so listen up. First, you're often trading in a simulated environment, even when you have a funded account. Second, the whole space is pretty much unregulated, which means there's less protection for you. Third, and this is a big one, you have to ask yourself, does the firm make more money from your success or from the constant stream of fees from traders who fail the challenge? Their business model might actually count on you failing. That's a massive potential conflict of interest. And finally, every single firm has its own unique, complex rulebook that can be really tough to navigate.
So the key takeaway from people deep inside this industry is crystal clear. Doing your homework is completely non-negotiable. You have to read every single word of the fine print, understand every rule, and really dig into the reputation of any firm you're thinking about joining. You just can't afford to go into this blind.
So, where does that leave you, the aspiring trader? It leaves you at a really important crossroads, armed with the knowledge of this incredible opportunity, but also, hopefully, with a healthy dose of caution about all the risks involved.
Look, the bottom line is this. The modern prop firm model can be an incredibly powerful tool. It offers a path to trading capital that just didn't exist for the average person a decade ago. But it is not a golden ticket. It demands that you be careful, that you educate yourself, and that you are meticulous with your research.
And all of this brings us to our final big picture question. Is this new model truly leveling the playing field for everybody? Is it creating a world where skill is the only thing that matters, or has it just created a brand new system with a different set of gatekeepers, the evaluation challenges, the complex rules? That is the billion-dollar question that's shaping the future of trading for an entire generation.
What if I told you the secret to becoming a consistently successful trader isn't some hidden formula, but actually a code? Well, today, we're going to crack that code. We're going to dive into the habits, the mindsets, the stuff that really separates the top prop traders from, well, everyone else. And let me tell you, it's not about one magic trick. It's about a whole system. So, what's the real secret here?
I mean, what's the actual difference between someone who just gets lucky for a little while and someone who builds a real, sustainable career in trading? To figure that out, we went straight to the source. We're talking about professional traders, the ones who are in the trenches day in and day out. And everything we're about to go through, it comes directly from them.
All right, so we've boiled their entire approach down into 4 main parts. First, we're going to tackle the pro trader's mindset. Then we'll get into the nitty-gritty of winning the trading day. After that, a super important one, how to survive those inevitable losses. And finally, we'll pull it all together to see how you turn this from a hobby into a real career. Okay, let's kick things off with Section 1, the pro trader's mindset. Look, before you even think about looking at a chart or placing a trade, the real work, it starts right here, in your head. This is the foundation that everything else is built on. Get this right, and you're already way ahead of the game.
You know, what's really fascinating is that for a lot of these top traders, their journey didn't start in front of a computer screen. Nope. It started with stuff like a paper route or a summer job mowing lawns. Think about it. By working from a young age, they built this incredible work ethic and, maybe more importantly, a real respect for what a dollar is worth. That same discipline, it became the absolute bedrock for how they managed and grew their trading accounts later.
All right, here's a huge one, a concept that came up over and over again, core consistency. Now, this doesn't mean being rigid or never changing. It's about depth over breadth. See, successful traders aren't the ones jumping from one hot strategy to the next every single week. They pick a lane. Maybe it's fundamental analysis, maybe it's pure technicals, and they dig deep. They commit to mastering it for years. Sure, their specific tactics might evolve, but that core philosophy, it stays the same.
And this is exactly what that looks like in the real world. A trader who cut their teeth on fundamental analysis, digging through earnings reports, they don't just ditch all that because some new indicator is trendy. That's their core skill. And it's the same for a technical trader who lives and breathes price action. It really just goes to show being a master of one thing is way, way more valuable than being a jack of all trades.
Now, this next point might sound a little simple, but trust me, it is a massive professional edge. We're talking about self-awareness. Profitable traders are just brutally honest with themselves. They know their own personality inside and out. They know their triggers, their weaknesses, like are you impulsive? Do you get scared in close trades too early? They take that knowledge and build rules specifically to protect themselves from themselves. The whole point is to build a system that fits you, not trying to cram your personality into a system that was built for someone else.
Okay, the last piece of this mindset puzzle is all about managing expectations. This is a huge divide between amateurs and pros. Amateurs are chasing that get-rich-quick fantasy. Professionals, they live in a totally different world. They start by accepting one simple fact. This is incredibly hard. They know you can't force profits, you can only take what the market decides to give you. And maybe the biggest thing of all, they zoom out. They're not judging their performance day to day. They're looking at it quarterly or even yearly. That shift in perspective, it changes the entire game.
All right, so we've got the mindset down. Now let's get into the second section and see how that foundation translates into actually winning the trading day. This is all about daily execution and having that tactical edge when it counts. Okay, this is a huge psychological key. Pros know that how your morning starts can literally set the tone for your entire day, especially emotionally. That's why they are so incredibly picky about their first few trades. They're not just firing away. They are patiently waiting for those A-plus setups. Why? Because they want to get a win on the board early. It builds a cushion, both in their account and in their head.
And I mean, the difference between these two paths is just night and day. If you get an early win, you build that cushion, right? You're confident, you're patient, you can take smart, calculated shots later. But an early loss? Oh man, that just throws you on the defensive immediately. You start scrambling to get back to break even, you get into revenge trading, and all that stress just leads to terrible decisions, and usually an even bigger hole to climb out of.
So remember how we talked about core consistency in your overall philosophy? Well, this is kind of its tactical cousin. True mastery in trading comes from a laser-like focus. And from what we've seen, pros usually get there one of two ways. Either they pick a single instrument, like say the S&P 500 futures, and they learn every single little quirk about it, or they master one specific strategy and apply it across just a handful of markets. Either way, that intense focus is what lets them make smart decisions in a split second.
So how do they actually find those high probability setups they're looking for? Well, they hunt for something called confluence. It's a fancy word for a simple idea.
They're looking for multiple, separate reasons that all point to the same trade. So for example, imagine a stock is hitting a major support level, and a key moving average is right there, and you see a big spike in buying volume. When you get a few things like that lining up, all screaming the same message, that's when their confidence goes way up, and often so does their position size.
Okay, here's another classic pro versus amateur move. An amateur sees a stock going parabolic, and what do? They chase it. It's pure FOMO, fear of missing out. A professional, they almost never do that. They like to buy things on sale. They'll see that same breakout, but instead of chasing, they'll patiently wait for the price to pull back a bit to retest that level. It takes patience for sure, but it gets them a much better entry price and a way better risk to reward on the trade.
All right, let's shift gears to section 3, and honestly, this might be the most critical part of this entire breakdown. We're talking about surviving losses, because they are absolutely going to happen. This is all about playing defense. At the end of the day, a long career in trading isn't defined by how much you make on your winners, it's defined by how little you give back on your losers. That's the secret sauce to longevity.
I want you to burn this next number into your brain. It's so simple, but it is one of the most powerful risk management rules that these pros live by. It comes from baseball, and for them, it is totally non-negotiable.
And there it is, the 3 strikes rule. It could not be simpler. 3 losing trades in a row, and you are done for the day. You shut down your computer, you walk away, no questions asked. And the real genius here is that it's not just about protecting your money, it's about protecting your mind. It's a built-in circuit breaker to stop a bad day from spiraling into a truly catastrophic, account-destroying day.
This really gets to the heart of what professional risk management is all about. You see, amateurs are obsessed with finding the next 10-bagger, the next huge win. Professionals, they are obsessed with cutting their losses short. They know deep down that just a few sloppy, uncontrolled losses can completely erase all the hard work from their best trades. Good defense really is the best offense in this game.
Okay, this next point might actually surprise a lot of you because it goes against a lot of what you read in trading books. Everyone talks about only taking trades with a huge risk-to-reward ratio, right? Well, what we found is that a ton of successful day traders actually focus on the complete opposite. They prioritize a high win rate. They'll happily take trades that are 1-to-1 risk-to-reward, or sometimes even less, because their goal is to be right often and just consistently bank small, steady profits. It's a different way of thinking. Okay, for our final section, let's zoom all the way out. We've talked about mindset, tactics, and defense. So how do you actually weave all of those threads together to build a real, sustainable career that lasts for years?
Look, becoming a professional trader is a marathon. It's not a sprint, and there's a pretty common path of evolution. In year 1, it's all about just mastering that one single strategy. By year 3, maybe your goal is to start matching your old paycheck. But the key to real longevity, to making it past that 5-year mark, it's all about learning to adapt when the market inevitably changes. The best traders out there, they never, ever stop being students of the game.
And you know what? They don't do it in a vacuum. Almost every single trader we looked at stressed how incredibly important it is to be part of a trading community. Let's face it, trading can be a really lonely and isolating job. Having a community gives you a place to bounce ideas around, talk about what the market's doing, hold each other accountable, and frankly, just to stay sane. It's an absolute goldmine for your own growth.
So after all of this, what is the one big secret? Well, the truth is, there isn't one. Success in trading isn't some magic bullet or a secret indicator you can buy online. It's about the boring, disciplined, day in and day out execution of a whole system of habits. A system that covers everything from your psychology to how you click the mouse. And that really brings us back to you. We've just broken down this entire trader's code. The mindset, the daily tactics, the rules for survival, the long-term view. So now, the only real question left is, which one of these pieces are you going to start working on first?
So what does it really take to become a champion in the trading world? And I'm not talking about some one-hit wonder. I'm talking about someone who wins consistently on the world's biggest stages. Today, we're going to deconstruct the entire journey of a trader who's done just that, over and over again. Rob Hoffman. To really get a sense of the level we're talking about, let's just start with one number, 33. Yeah, you heard that right. That is how many real money, high-stakes, international trading championships Rob Hoffman has won. This isn't paper trading, this isn't theory. This is proven, consistent success under some serious pressure. So what's his secret? how in the world did he get there? Okay, so here's how we're going to break down his whole evolution. We're going to start with the champion's mindset, because that's the foundation for everything. Then we'll look at how he was forged in the grind, his early days. We'll dive into the super dangerous Superman trap that almost ended his career. Then we'll see his incredible transformation from the hunted to the hunter, witness his unbelievable patience under pressure, and finally, we'll boil it all down into a few simple but really powerful rules. All right, so the central idea behind Hoffman's success is, well, it's kind of a paradox. He believes that trading less actually leads to winning more. Think about that. In a world that's all about constant action and noise, his entire discipline is built around waiting, observing, and only striking when the moment is absolutely perfect. It's a game of precision, not volume. Now, that kind of discipline, it doesn't just appear out of thin air. Hoffman actually grew up in a law enforcement family where structure and, regimentation were just part of daily life. This foundation of order and patience, well, it would become the absolute bedrock of his entire trading career. Let's actually look at the timeline to see how this all came together. His whole journey started when he was just 16 years old, paper trading his way through that historic 1987 market crash. And that's where he learned a crucial lesson. You can make money even when markets are completely falling apart. Now, to build up his trading capital, he worked the equivalent of 2.5 jobs in law enforcement. Can you imagine that grind? And that finally allowed him to take the leap and become a full-time trader in the late 90s. And this quote, wow, it just brilliantly illustrates his incredible dedication. Long before we had high-speed internet and apps on our phones, Hoffman was in his squad car studying hundreds of printed-out charts. He would literally have to dial out on a phone just to get a current quote. That is the definition of relentless commitment. But you know how it goes. With great success often comes a really dangerous enemy, arrogance. This next part of his story is about the critical lesson that truly defined him as a trader, a painful, catastrophic loss that was born from feeling totally invincible. This is what he calls the Superman trap. For 18 incredible months, a year and a half, he just couldn't lose. He was racking up winning days of $1,000, $5,000, even $10,000, day after day. He wasn't just on fire, he felt like he was the fire. And this insane winning streak created what he calls a Superman complex. He started to believe he could do no wrong, that his instincts were just infallible, he felt invincible, and that is the exact moment he became his own worst enemy. And then came the moment of truth. One day, he looked at his system and every single one of his indicators was screaming sell. We're talking the 1-minute chart, the 5-minute, the hourly, the daily. All of them, as he put it, were blood red. The very system he had built his career on was giving him the clearest warning possible. So what did he do? He ignored every single warning. He bet against his own system, against all the data, and he went long. Why? Because he thought he was Superman. And the market immediately, and I mean immediately, plummeted hundreds of points, handing him the single biggest, most painful loss of his entire career. Absolutely crushed by this loss, he told his wife what happened. And her response was so simple, yet so profound. She just said, "Get back at it. Tomorrow you'll do better." That moment of support, of resilience, that was the turning point. The loss wasn't the end. It was actually the most important lesson he would ever learn. That humbling, gut-wrenching experience sparked a complete transformation. It forced him to analyze every single mistake he made and develop a brand new philosophy, a huge shift in his mindset that turned him from the hunted into the hunter. This slide just lays it out perfectly. On the one hand, you have the hunted trader. They see that big green bar shooting up and they chase it, right? They jump in out of pure fear of missing out. But then, bam, they get crushed on the pullback that always comes. Now look at the hunter. They see that exact same green bar, but instead of chasing it, they wait patiently like a predator in the weeds for that pullback. They let all the hunted traders get shaken out, and then they enter, riding the next wave up. And there it is, in his own words. This was the key. Instead of being the one reacting to the market's every little move and getting trapped, he became the one patiently waiting, letting the market come to him, and then striking with absolute precision. So this philosophy got baked into a real, concrete strategy he calls TPT, thrust, pullback, thrust. It's actually pretty simple, but it's so powerful. Step 1, you identify a strong move, that's the initial thrust. Step 2, and listen up, because this is the most important part, you wait for the pullback. You let all those emotional, hunted traders get totally shaken out of the market. Only then do you go to step 3. You enter the trade as the price starts to move back in the original direction. That's the final thrust. The key here is huge. You never buy the initial breakout. You buy the confirmation after the pullback. Now, it's one thing to have a great strategy, right? But it's a completely different thing to actually execute it when you're under extreme pressure. So let's see how this whole hunter mindset played out on the world stage of those international trading competitions. Okay, just try to imagine this. You're in a live competition, you're representing your country, other traders are making moves like crazy. Bots are firing off trades every second, and the announcer keeps updating the crowd. So-and-so is up this much, Rob Hoffman is flat, and then a few minutes later, another trader just made a huge score, Rob Hoffman is still flat. He said you could literally hear the audience start to chuckle at him for doing nothing. He waited and he waited, totally ignoring the pressure and the mockery, just staying true to his hunter philosophy. And then, all of a sudden, the announcer would just shout, Hoffman is in first place. He'd taken one single perfect trade. And after that, he said they didn't laugh anymore. That right there is patience paying off. So, after this incredible journey of trial and error and ultimately triumph, what are the core principles that guide him today? Let's distill his entire philosophy down to a few final essential rules. So here they are, the 3 pillars that hold up his entire strategy. First, stay with the trend until the bend in the end. Pretty simple, right? Don't fight the market's momentum. Second, a theme we've heard over and over, take the right trade at the right time for the right reasons. It all comes down to patience. And third, the absolute core of his TPT strategy. Don't buy the breakout, wait for the pullback. This gives you a much, much better risk-to-reward entry, and it's the heart and soul of that hunter mentality. And that really brings us to the final and most crucial question. And this isn't just about financial markets. This applies to any field where you have to make decisions under pressure. Are you reacting emotionally, chasing every little opportunity because you're afraid to miss out? Or are you patiently waiting for that perfect moment to act with precision and with confidence? So the question is, are you the hunter or are you the hunted?
Today, we're diving into the playbook of Davide Biocchi, a 10-time international trading champion. But get this, his story doesn't start on some bustling Wall Street trading floor. No, it begins in probably the last place you'd ever expect, and it's all thanks to one of the most powerful forces in the universe, crippling boredom.
So let's set the scene. Picture it. It's 1995. Davide is helping run his family's seaside hotel in Italy. But it's the off-season, so there are no guests, nothing to do. The silence is just deafening. And it was right there, in that unbearable quiet, that a legendary trading career was accidentally born.
I mean, just look at this. On one side, you've got a family hotel manager. Your job is pouring coffee and checking people in. On the other, a 10-time trading champion doing battle with supercomputers and giant financial institutions. So the big question is, how on earth do you get from point A to point B? Well, that's the incredible story we're unpacking today. We're going to follow his journey through 6 key stages. We'll start with how he stumbled into trading by accident, then how he mastered his first killer strategy. We'll look at the crisis that nearly ended his career, his fight against the trading algorithms, and how he developed his modern playbook. And finally, we'll boil it all down to 3 essential rules every trader needs to hear.
Okay, so let's get right into it. It all kicked off when a friend suggested he try out this new thing called simulated trading. You know, paper trading. This was back in 1995 with an early computer and a dial-up connection. He got a fictional $100,000 to play with, and he started buying and selling stocks. Not because he wanted a new career, but literally just have something to do to escape the monotony. And things moved fast. After just a few months of playing around with fake money, he cashed out a savings plan and jumped in for real. He'd be in his hotel office trading U.S. tech stocks like Intel and Cisco right after the lunch rush. By the year 2000, he'd switched to the Italian market, which he knew better, and get this, he was making more money from trading than the entire hotel was bringing in. So by 2003, it was a no-brainer. He sold the hotel and went all in on trading. So, you've got to be wondering, how did he get so good so fast? It wasn't because of some fancy chart pattern or secret algorithm. Nope. It all came down to mastering one single tool, the order book, which is basically just a live list of all the buy and sell orders for a stock.
You see, he didn't see a list of numbers. He saw a battlefield. He realized he wasn't trading against some faceless market.
He was trading against other people. For him, it became this incredible mind game, placing orders, faking them out, canceling them, trying to anticipate what the human on the other side was going to do next. It was high-stakes chess, and the market was his chessboard.
And the results of that chess game were frankly astonishing. He started with an account that was worth just over 2,700 euros in today's money. In a single year, he turned that into nearly 80,000 euros. His whole approach was intuitive, it was psychological, and it was delivering returns that were almost unbelievable.
But of course, the second he went full-time, the story takes a really dark turn. The freedom he was looking for? It quickly morphed into just this immense pressure, and it led directly to the single biggest crisis of his entire career. I mean, really think about that mental shift. Before, trading was for extra money. It was a bonus. Now it was everything. It was the only income. He had a wife, 3 kids, a house. The need to make money just to pay the bills created this overwhelming stress, and that stress just completely shattered his focus and his strategy.
And that pressure led to this, a catastrophic 12,000 euro loss on one trade. He bought shares in this huge Italian food company, Parmalat, right after they put out a statement saying they had tons of cash. Well, it turns out that statement was a total fraud, literally faked with Photoshop. The stock was suspended, then delisted, and his money, it just vanished overnight.
He felt totally cheated, like a victim, and he fell right into this super dangerous psychological trap that traders call revenge trading. He just started trading like a maniac, trying to force the market to give him his money back. But it's this vicious cycle, right? The more you lose, the angrier you get, the harder you push, and the more you lose. It took him over half a year to finally break free from that spiral. So, how in the world do you pull out of a nosedive like that? Well, his recovery came down to 2 key things: finding some financial stability outside of his trading, and then confronting a brand new opponent that was changing the game forever: algorithms. And this was the turning point. A broker he knew started paying him to run educational seminars and be a spokesman. All of a sudden, he had a stable, predictable paycheck. The pressure was off. He no longer needed to win every single trade just to pay the bills. And ironically, that's what finally allowed him to start winning again. But just as he was getting back on his feet, the whole landscape of the market was changing under him. The humans he was playing chess against were being replaced by high-speed computers. To survive, he had to figure out how to trade against the machines. And you know what? In the beginning, he could beat them. These early algorithms were super fast, sure, but they were also pretty dumb. They lacked any kind of human intuition. So David found that with his years of experience, he could actually anticipate what the bots were going to do and trade against them. For a little while at least, man was still winning against machine.
But that didn't last. The machines got smarter, a lot smarter. They got faster, more complex. So to stay in the game, Davide had to evolve, again, and this time it meant throwing out his old methods completely and building his own technology to fight fire with fire. So he developed and patented his own software, and what was so cool about it was that it didn't just look at price and volume. It figured out who was doing the trading. He broke the market down into these 3 groups: the piranhas, that's us, the retail traders, then the white sharks, who are the mid-level pros, and finally the blue sharks, the massive institutions who actually moved the market. His whole goal became simple: swim with the blue sharks and stay away from the piranhas.
I mean, the transformation is just radical. He went from being this high-stress scalper, making 100 trades a day based on gut instinct, to this calm, selective, systematic trader, making maybe 5 to 10 trades a day. He became a total chameleon, adapting his style again and again just to survive. So, after this incredible journey of survival and adaptation, what's the big takeaway for the rest of us? Well, Davide boils down decades of experience into 3 essential rules. And here's the kicker: they have almost nothing to do with picking the right stock. His first rule, and he says this is by far the most important, is all about mastering the one thing in the market you can actually control: yourself. It's all about money management and emotional discipline. So his first piece of advice is to ditch paper trading as fast as you can. Why? Because it teaches you absolutely nothing about handling the fear and greed that comes with real money. Instead, he says, start small but with real cash. Then slowly increase your size until you find that point where it starts to make you nervous. That's your emotional limit. If you're losing sleep over a trade, you're trading way too big. He swears this emotional control is more than 80% of the entire game. Okay, his next rule is really 2 rules in one. First, always have a plan. You have to know your exit.
for a win or a loss before you ever click buy. But the second part is what separates the pros from the amateurs. Have a plan B. You have to plan for the moment when you, as a human, inevitably break your own rules. What's your emergency escape plan when you panic and miss your stop loss? Having that figured out beforehand is what stops a small mistake from turning into an account-destroying disaster. Because as the math shows, survival is everything.
So, in the end, Davide's entire story shows that the holy grail of trading, it isn't some secret indicator or a magic algorithm. It's the relentless ability to adapt, and even more than that, to master your own internal psychology. His real secret wasn't about conquering the market, it was about conquering himself. And that leaves all of us with a really critical question. Are you prepared to do the same?
All right, let's get into it. Today, we are diving deep inside the mind of John Bannon. He's a world-class futures trader who found what some might call a controversial, almost mystical way to look at the markets. And his story, you'll see, isn't just about charts and profits. No, it's a full-blown quest to find predictable patterns right in the heart of all that financial chaos.
So does his method actually work? Well, this quote kind of says it all. We're not talking about some guy trading in his basement with hypothetical money. Bannon put his strategy on the line in the Robins World Cup. We're talking the oldest, most prestigious trading competition on the planet. And he wasn't just participating, he was leading the pack for months. This proves his approach isn't just theory, it absolutely thrives under insane real-world pressure.
But to really get where he is now, we have to go back to the beginning. Before the championships, Bannon was a market analyst. And when he looked up the corporate ladder, you know what he saw? A total dead end. The people just one step ahead of him were completely fried, just burning out. He knew right then and there that was not the life he wanted. And that feeling, well, that was the spark that sent him searching for a totally different path.
So here's how we're going to break down his incredible journey. First, we'll look at that massive leap he took from a safe career into the great unknown of trading. Then we'll follow his very expensive search for a real edge. We'll get into his big aha moment with market cycles and how he built a rock-solid system around it. Then we'll tackle the psychology of it all and wrap up with his most valuable, hard-won tips. Okay, let's start with that first huge step. The moment Bannon basically torched his old life and was forced to build a new one from scratch. So what was the big catalyst? Was it a hot stock tip? A market crash? Nope, it was love. Bannon met his future wife, packed his bags, quit his job, and moved all the way from the UK to Canada. And here's the kicker. Because of immigration rules, he couldn't legally get a job for a while. So this wasn't him deciding to dabble in the markets on the side. He was literally forced to find a new way to make a living, completely outside the 9-to-5 world. At first, he did what seemed logical. He turned to investing, the Warren Buffett way. And he was good at it, but he realized something really important, really fast. Value investing, it's a slow burn. It's solid for sure, but it wasn't exciting, and it just wasn't going to give him the kind of life-changing results he needed. And that's when his focus shifted, from the slow and steady path of investing to the fast-paced, high-stakes world of trading. Okay, so deciding to be a trader is one thing, but actually figuring out how to do it successfully, that's a whole other ballgame. This next chapter for him was a tough and, frankly, a very expensive hunt for a strategy that actually worked. And when I say expensive, I mean it. This number right here shows you the level of commitment we're talking about. Then Embaughis didn't just buy a few books. He poured tens of thousands of dollars into his own education, flying to seminars, taking courses, you name it. This was never a hobby for him. From day one, it was a dead serious professional mission. And you can see his focus just getting sharper and sharper over time. It's a clear path toward specialization. He started out pretty broad, looking at individual stocks. Then he moved into the more volatile small caps. As ETFs got big, he adapted to those. And then finally, by 2014, he landed on the two instruments he would go on to master: index futures, specifically the E-mini S&P 500, or ES, and the NASDAQ 100, which traders call NQ. And this is where the story really takes a turn. After years of trying all the conventional stuff, Bannon stumbled onto an idea that would change absolutely everything for him. An idea that goes against what pretty much most traders believe. It all comes down to this one simple question. Can the market really be predicted? Now, the standard answer you'll get is, no way, the market's random, you can only react to what it does.
But Bannon found this other school of thought that said, wait a minute, yes it can be, not by reacting, but by forecasting. I love how he describes this discovery. He gets introduced to the work of W.D. Gann, this legendary, kind of controversial trader from a century ago, whose methods were a wild mix of math, geometry, and other stuff. Bannon's first reaction was total disbelief. He called it a woo-woo model. But right behind that skepticism was this burning curiosity. He just kept thinking, wait, how is that even possible? And that one question sent him tumbling down a rabbit hole that would end up defining his entire career. So what is this secret weapon? It's called cycle-based forecasting. And the core idea is actually pretty simple. Markets aren't totally random. They move in these identifiable, time-based patterns that repeat over and over again. So if you can figure out the cycle, you can actually forecast when the market is likely to turn, days, even weeks ahead of time. You stop reacting to price and you start anticipating based on time. It's a total game changer. But look, having a radical theory is one thing. Turning it into a profitable system you can use every single day, that's the real challenge. So this next part is all about how Bannon built a practical, repeatable framework around this wild idea. His search for some kind of certainty led him to a really important conclusion. You just can't master everything. So instead of chasing a dozen different markets, he decided to go deep. He narrowed his entire focus to just two of the biggest, most liquid trading instruments in the world, the ES and the NQ. By knowing these two markets inside and out, he could apply his cycle analysis with a level of precision that just wouldn't be possible otherwise. Now, I want you to pay very close attention to this number. $10,000. This number is the absolute cornerstone of Bannon's entire approach to risk. It's not a guess, it's not a gut feeling, it is the real, historical, absolute worst-case loss his system has ever taken on a single contract. And knowing that number, that's the key to everything else he does. So here's how he uses that number. And this is where he completely flips risk management on its head. Most traders ask, where should I put my stop loss? He asks a totally different question. If the worst thing that ever happened to my system happens again, right now, how much of my account am I going to lose? He then sizes his trade based on that. So let's say his personal pain threshold is a 20% loss on a $50,000 account. Well, he knows that one contract with its $10,000 max drawdown fits perfectly. It's a truly professional way to look at risk. Okay, so you can have the most perfect system in the world, but it's totally useless if you can't actually follow it. So now we're going to shift from the mechanics of trading to the real battlefield, the one inside your own head. Bannon uses this incredible metaphor, and it just hits so hard. Trading without a system is like driving at night with no headlights on. You're just flying blind, completely at the mercy of your fear and your greed. The system isn't just about making money. It's your plan. It's the set of lights that cuts through the darkness and keeps your emotions from driving you straight off a cliff. And these are the specific demons he's fighting every day. Even after 20 years, he says he still gets that horrible feeling when a trade goes south. He feels the pressure of knowing clients and other traders are following his moves. He has to fight that urge to just snatch a small profit when a trade could be a massive home run. But you know what the worst feeling of all is? Beating himself up for breaking his own rules. Because at that point, he knows he's just guessing. So finally, let's boil all of this experience down into some advice we can actually use. This is the wisdom Bannon has earned over 2 decades of intense focus and dedication. Here they are, his 3 core principles. Number 1, specialize. Master 1 or 2 things. Don't be a jack of all trades and a master of none. Number 2, do not break your rules. Your system is your only defense against making dumb, emotional decisions. And number 3, this is a really practical one, think of day trading as your job, the thing that generates cash flow to pay the bills. And think of swing trading as your long-term plan for building real, lasting wealth. They serve 2 totally different purposes. So what's next for John Bannon? You'd think he'd just be happy with his success, right? Nope. His mission is actually bigger than just trading now. He's working on using modern tools like artificial intelligence to scientifically validate his life's work. He wants to prove, once and for all, that these market cycles are a real, measurable phenomenon, that there's a hidden rhythm to the markets that we're only just starting to understand. And that leaves us with a pretty fascinating thought to end on. Bannon's whole quest started with him just trying to figure out the stock market. But if he pulls this off, If AI can actually prove there's a predictable rhythm in something as ridiculously complex as global finance, what does that mean for other chaotic systems? From weather patterns to social trends, what other hidden rhythms are out there, just waiting for us to discover them?
When you think of a big shot trader, you probably picture someone making millions on one giant, dramatic bet, right? But what if I told you the real secret to a 30-year career in the markets is the total opposite of that? It's not about home runs. It's about a disciplined, consistent grind. So today, let's dive into the powerful philosophy of David Floyd.
Right off the bat, David Floyd tells you himself that his story isn't some Hollywood blockbuster. He's not going to be the guy at the barbecue telling you about the time he bought a stock right before it shot up 50 points. No, this isn't about glamour at all. It's about a relentless, almost boring, discipline and consistency that has kept him in the game for 3 decades. And that's really the big question here, isn't it? How does a self-proclaimed grinder, a trader who focuses on just chipping away for small, steady wins, end up building a career that outlasts almost everyone else and eventually managing a multi-million-dollar fund? Well, the answer reveals a really powerful lesson about what mastery actually looks like. Okay, so to really get David, you first have to understand his unique philosophy. It's something he's been working on and refining since he started way back in 1993. And it's a completely different way of looking at success in the markets, one that puts survival and consistency above absolutely everything else.
So what exactly is a grinder? Well, it's a trader who isn't hunting for that one massive, life-changing trade that's going to make their whole year. Nope. Instead, they are super methodical. They're just chipping away at the market day after day, piling up these small profits that over time build into something really significant. It's a marathon, not a sprint.
Now, this is where his strategy gets really interesting, especially for serious investors. He focuses on something called positive convexity. It sounds complicated, but think of it like this. Most investments do well when the market goes up. That's normal, but a strategy with positive convexity is built to do exceptionally well when the market goes down or gets really chaotic. It's basically like having an insurance policy that pays out big time right when all your other investments are in trouble. It's a powerful way to diversify.
But here's the thing. This masterful consistency wasn't something he was just born with. Not at all. To see how he developed this grinder mentality, we have to go right back to the beginning of his career. And let me tell you, it was anything but a smooth ride.
So, at 24 years old, David lands his dream job as a prop trader. The dream, of course, was making a living from the markets. But the reality? For an entire year, his account was completely flat. Zero profit. To pay his bills, he had to take what he calls a miserable part-time job cold calling for Merrill Lynch. I mean, can you imagine that contrast between the dream and that harsh reality? That's what forged him.
I think every trader has that one moment that completely defines their career, a point where things finally click. For David, after nearly a year of just struggling, that breakthrough came, and it wasn't from some new secret strategy. It came from a huge psychological shift.
So what was it? What was holding him back? He had the desire, he had the tools, he was definitely putting in the hours. So why wasn't he making any money? Well, turns out the problem wasn't what he was doing, it was what he was thinking.
The roadblock was all in his head. He was so afraid of being wrong, so scared of losing money, that he would just hesitate. And by the time he finally worked up the nerve to get into a trade, guess what? The best part of the move was already over. This crippling lack of confidence was the only thing standing between him and being a profitable trader.
And this right here is his core insight, and it's brilliant. We often think you need to have the right mindset first, and then you can build a plan. But David figured out it's the complete opposite. You have to have a game plan that you trust, that you believe in, and then, and only then, can you build a mindset to actually execute it. He actually learned this from watching a new guy in his office, a guy named Bob, who was just printing money, doing the exact same trades David was only thinking about doing. Bob had conviction, and David realized the process was crystal clear. First, you develop your plan. Second, you have to watch it work in real time to build that deep belief, that conviction. And third, once you have that conviction, then you can finally execute without hesitation. Okay, so with the right mindset finally in place, what does David actually look at to make his trading decisions? Let's pop open his toolkit. What you're going to see is that it's all about seeing the market from a bunch of different angles all at once.
So this isn't just some simple checklist he runs through. It's more like a symphony of different inputs. Take that first one, multiple time frame confluence. He's not just staring at a 5-minute chart. He's asking, okay, does the bullish pattern I see right here also show up on the hourly chart? And is it supported by the overall trend on the daily chart? When all 3 time frames are singing the same song, that's confluence. Then he layers that with order flow, options activity, and even what other markets like bonds and gold are up to.
And here is where all that experience really pays off. Managing risk. An amateur trader might just use a rigid preset stop loss. You know, they get shaken out by the normal little wiggles in the market. But David, he reads the market's personality in real time. He gives a trade breathing room, using his decades of experience to get a feel for whether a level is truly broken or if it's just being tested. That is a level of intuition you just can't program into a computer. You know, that kind of real-time intuition, that mental horsepower to juggle all those different factors at once, that doesn't just appear out of thin air. It has to be cultivated. And for David, that whole process starts long before the market even opens.
I mean, just look at this daily schedule. The man is up at 4:30 in the morning, and his most intense, active trading is all done by 8:30 a.m. He's definitely earned a flexible lifestyle, but it's built on this foundation of extreme early morning discipline. The rest of his day is for managing his existing positions and, just as important, actually living his life.
And this quote just ties it all together perfectly. David is convinced it's impossible to maintain a mental edge in the markets if you aren't taking care of yourself physically. Good sleep, nutrition, exercise, these aren't optional extras for him. They are absolutely fundamental to showing up sharp, fresh, and focused every single morning.
So, after everything we've talked about, what's the ultimate takeaway from David's decades of experience? Well, he boils down his entire journey into a few core principles that honestly any aspiring trader absolutely needs to hear. So here they are, the 5 key lessons from his journey. Number 1, grind for consistency. Stop chasing glory. 2, find your specialty and become a master at it. 3, listen to the market. Don't try to force your will on it. 4, treat this like a real profession with professional habits. And finally, and this might be the toughest one, give yourself time. This stuff does not happen overnight. But his final piece of advice, it's the most profound. And honestly, none of those other tips matter without this. You have to really, truly love this. You have to love the process, the puzzle, the challenge. Why? Because, as he says, the market is going to kick you in the ass every single day. If you're just in it to make some extra money, it's just not enough fuel to survive the grind. It won't work.
And this brings us to one final, crucial question. Yeah, discipline is what gets you through the tough days when you're not motivated. But David's story really shows that lasting success, true success, is fueled by something much deeper, a genuine passion for the challenge itself. So, what's your grind? What's the one thing you love enough to keep pursuing, even on the days it feels like it's kicking you in the ass?
All right, so today we're going to talk about a real pioneer in the trading world. I mean, this is the story of someone who started with literally zero interest in the stock market, and yet she became an absolute legend in a field completely dominated by men. And how'd she do it? By building this incredible 45-year career on pure mathematical precision and just an unshakable belief in her own data. So let's dive into the amazing story of Sunny Harris. You know, this quote right here, it tells you pretty much everything you need to know about her. This wasn't just some trading philosophy she picked up. Nope. This was her life's mantra, long before she ever even thought about placing a trade. It's the kind of mindset that lets a person master multiple fields, retire at age 30, I mean, who does that? And then, just for the fun of it, launch herself into one of the most high-stakes professions on the planet. So what does that success actually look like in practice? Well, it looks like this. A single-year profit of 365%. Yeah, you heard that right. And let's be clear, this wasn't some lucky lottery ticket. No way. This was the result of a super rigorous, systematic approach. In fact, her approach was so good that a top research firm ranked her the #1 performing trader with under $10 million for 2 years in a row. So the big question is, how on earth did she get there? Okay, so what's so fascinating about her story is that it has absolutely nothing to do with finance, at all. She was a math prodigy from Appalachia, and for her, education was the only way out. Now picture this, by her 20s, she's not on Wall Street. She's at Lockheed with top-secret clearance working on prototypes for the space shuttle. I mean, come on. From there, she becomes a VP at a startup that grows into a world-leading software company, and by the time she's 30, she's already lived a full career and retired to travel the world. Just, wow.
And this is where the irony just gets so good. See, early in her academic career, a professor suggested she study Fibonacci numbers, because they're used in the stock market. And this quote, that was her exact response. A hard pass, a total rejection. For this young mathematician, the world of trading was about as alien as it gets. But, life has a funny way of working out, doesn't it?
So what was the catalyst, right? What pulls a person who completely swore off the markets right into the center of the storm? Well, this number right here. After she retired, she did what a lot of people do. She entrusted her money to so-called professional managers. They put her money in commodities, promised her the moon. But instead, in just 3 weeks, they lost $75,000 of her hard-earned money. And get this, they did it by shorting pork bellies while the market was screaming upwards. You can't make this stuff up.
And this right here, this was her legendary response to that massive loss. Now, instead of getting scared and running away from the markets forever, her mathematician's brain just took over. It was this perfect storm of being totally frustrated with the incompetence she saw, mixed with this supreme confidence in her own analytical skills. She didn't see their failure as a risk. To her, it was just a problem that needed to be solved. And that one thought, that was the spark that ignited her entire 45-year trading career.
So, she jumps in, head first. We're talking about the early 1980s now, and she's trading S&P 500 futures. But listen, this is not the era of clicking a mouse from your quiet home office. Oh no. This meant she had to call her orders directly into the roaring, chaotic, absolute mayhem of the trading pit at the Chicago Mercantile Exchange. Just imagine that scene, a high-pressure arena completely dominated by men.
And this is actually how she found out just how unique she was. One day, she asked her broker, "How do you even recognize my voice so fast with all that shouting?" And his answer was so simple and so telling. He said, "You're the only woman who calls the floor." Hers was the only female voice they ever heard. Think about that. She wasn't just playing the game. She was, without even trying, a trailblazer.
Okay, so all of this builds up to a huge, defining moment in 1987. Every trader has one of these moments, and this was hers. Her charts, we're talking pure, unadulterated math, were screaming at her that a market crash was coming. But her trusted broker, a guy she'd worked with for over a decade, he literally laughed it off. He told her, charts don't mean anything. So this was it, right? A showdown between old-school gut feelings and new-school data-driven analysis. What did she do? She trusted her data. She sold everything, liquidated her entire portfolio, and then, calmly, flew to Europe for a vacation. And from a hotel room in London, she watched the Dow fall 506 points on TV, exactly like her math said it would.
So what was the reward for trusting her own analysis over the so-called experts? A cool $1 million. That's what. After the crash on Monday, she didn't panic. She just waited. And on Tuesday morning, she called that very same broker and calmly told him, buy everything you can get your hands on. I mean, the confidence. She sold at the absolute top and bought at the absolute bottom. This one trade became the bedrock of her entire philosophy. Trust the patterns, trust the math, and trust yourself.
But look, wisdom isn't just forged in these epic victories, right? While her biggest win taught her to trust her system, her worst loss taught her something just as important. It was during the Gulf War, and a scary headline flashed across the news. She panicked, bailed on a trade, and lost $13,000 in just 2 minutes. The lesson was crystal clear. Do not let fear-mongering news make you abandon your system. If she had just held on, just weathered that temporary paper loss, the trade would have turned into a winner. The pain of that mistake, that's what taught her true discipline. So this experience really pushed her to solve what became the central puzzle of her career. See, most trading systems, especially automated ones, are really rigid. They work great when the market is going straight up or straight down. But when the market gets choppy and goes sideways, what traders call whipsaw, those systems just get torn to shreds. They give back every single penny. So the question that obsessed her was this: how can you build an indicator that's actually smart enough to adapt in real time to whatever the market is doing?
And believe it or not, the answer wasn't in some trading book. It was buried in her own past. She had this aha moment where she remembered her master's thesis, something she wrote when she was just 20 years old, on the least squares method for statistical curve fitting. And she realized that this complex piece of math, which is designed to pinpoint turning points in data, could be taken from academia and just unleashed on the financial markets.
And this is what she created. So think about a typical simple moving average. It's kind of like a dumb follower. It always lags behind the price, right? And that's what causes all those painful whipsaw losses in choppy markets. Well, Sunny's dynamic moving average, the DMA, is completely different. It's intelligent. It's self-adjusting.
It literally recalculates its own parameters with every single tick of the market. So what does that mean? It means it can hug the trend really tightly when things are moving, but, and this is the crucial part, it knows when to flatten out and just get out of the way when the market is choppy. It avoids almost all of those nasty whipsaw trades.
Now, using this brilliant DMA as a foundation, she built her signature tool, the Sunny Bands. And this, folks, this became her secret sauce. It was this amazing combination of high-level math and just thousands of hours of simple observation. She just watched the charts and she noticed that the market tends to move about 1.2 times its average daily range before it pulls back, and about 2.0 times its range before a bigger pullback. So she coded these statistical tendencies right into bands around her DMA, basically creating a predictive map of where the market was likely to go next.
So, the big question, did it actually work under pressure? Well, let's look at the ultimate trial by fire, the 2001 dot-com crash. While the NASDAQ market was in an absolute freefall, losing a staggering 76% of its value, the hedge fund that Sunny was managing at the time, it lost only 11%. Let me say that again, only 11%. That's not just a good return, that is extraordinary capital preservation during a historic market meltdown. This right here proves the defensive power of having a system that's built to adapt. And look, that performance was no fluke. Over the long haul, her stats are just staggering. Let's break it down. A 78% win rate, a reward-to-risk ratio of 2 to 1. That means for every dollar she risked, she made 2. Or, to put it another way, her average winning trade was twice as big as her average losing trade. And maybe the most incredible stat of all, only 2 losing years in a 45-year career. I mean, that is the literal definition of consistency and mastery.
So, what can we take away from all this? She really boils down a lifetime of wisdom into a few key principles. First, you have to train your eye to see the patterns and the charts in the data. Second, diversify the things you trade. But, and this is a big but, focus your energy on becoming a true expert in just one core strategy. For her, it was the Sunny Bands. Also, stay busy, stay curious. The woman is still taking programming classes today. And maybe most importantly, you have to develop the discipline to remember that you never, ever have to force a trade. There will always be another one.
And all of that brings us to what she believes is the single most important skill a trader can have. And it's not what you think. It's not genius-level math. It's not a PhD in economics. It's not lightning-fast reflexes. It's patience. Just patience. The ability to literally sit on your hands and wait for your perfect setup to come to you, to let the market do the work. It's a skill she actually points out that women often seem to have more of, naturally, than men.
So for anyone out there who's inspired by this and wants to start their own journey, she lays out a really clear, really disciplined path. Step 1, educate yourself. Read everything you can get your hands on. She's read over 700 trading books. Step 2, trade in a simulator. And don't you dare stop until you have proven on paper that you can be consistently profitable. And then there's her final crucial rule. Do not even think about trading with real money until your simulated monthly profits are big enough to actually support your lifestyle. Only then, after you've proven the whole system works, do you go live with real capital.
When you really look at it, Sunny Harris wasn't a born trader. She was a mathematician, she was a programmer, she was a brilliant problem solver who saw this incredibly complex puzzle and just applied her own unique toolkit to crack it in a way no one else had before. So the final thought I want to leave you with is this question. For you, what's your unique background? What's your distinct skill set? And how can you leverage that to go out and master whatever it is you are truly passionate about?
Today, we're going to break down the incredible 22-year journey of Ali Crooks. Now, this is a trader who went from packing boxes in a factory to managing a multi-million-pound fund. And his story, it isn't about some secret formula or a magic indicator. Nope. It's about a raw, honest fight with the one thing that holds most traders back, themselves. And this quote from Ali, man, it just perfectly captures his entire philosophy. He sees trading as this constant tug of war, right? You've got the short-term chaos of the market trying to psych you out every single day versus the long-term rewards that, well, they only go to the disciplined. That's the core idea we're going to explore. So where did this all start? Well, before Ali ever even glanced at a trading chart, he was what he calls a serial entrepreneur. And the thing that drove him, his main motivation, was this deep, powerful need for freedom. He wanted a career where he and only he was calling the shots. Yeah, his path was anything but a straight shot to the top. He had a great work ethic from his dad, got his degree, and then boom, jumped right into business. First, a car rental company that actually did really well, but then a fitness gadget that totally flopped and left him swimming in debt.
It was right there at rock bottom at just 25 years old that he saw trading as the ultimate path to self-reliance. No employees, no business partners, just him against the numbers. But his first impression of trading was, well, it was dangerously simple. He saw all the potential freedom, all the money you could make, but he was completely blind to the massive risk and the psychological warfare that was waiting for him. He was just staring at the prize, totally ignoring the process. And you know what happens when that kind of naive optimism meets the real world, right? It crashes hard. So let's get into his first big wipeout, the experience that would completely tear down and then rebuild his whole idea of what being a trader even means. So after flying all the way to Las Vegas for a 3-day course on options trading, he comes back to the UK feeling like he's got it all figured out. He puts his entire remaining capital, £5,000, into a trading account. And in just 6 weeks, it was all gone. Every single penny. Poof. Now, looking back, Ollie didn't blame his strategy. He didn't blame the market. No, he pointed the finger right back at himself. He realized the real problem was psychological. He wasn't trading a system. He was just gambling based on pure, uncut greed, chasing fast money with zero plan. So, completely broke and feeling pretty humbled, Ali takes a job packing boxes in a factory. But here's the amazing part. He didn't quit on his dream. He specifically picked the 6 a.m. to 1 p.m. shift for one single reason, so he could literally race home every afternoon to trade the U.S. market open. The dream wasn't dead, not even close. It was just on a different schedule. So this is the big question, right? How do you go from packing boxes on a factory floor to becoming a consistently profitable trader? Well, the answer wasn't some new indicator or a secret strategy. It was a massive, fundamental shift in his entire mindset. The real turning point, and you got to hear this, came when he stopped trying to make money. I know, it sounds crazy, but instead of chasing profits, he got completely obsessed with the process, the charts, the patterns, and most importantly, his own psychological performance. He went from chasing an outcome to mastering the process. In this new mindset, it turned into a full-blown scientific obsession. He found a mentor, a guy named Kevin, who was the definition of discipline. Then he started treating his own trading like a lab experiment. I'm talking tracking over 15 different data points for every single trade he took, and that included how he was feeling. This wasn't market analysis anymore. This was deep self-analysis. And that data, it revealed his biggest enemy, a sneaky, subconscious habit he called revenge trading. The numbers were crystal clear. After he took a couple of losses in a row, he'd start ignoring his own rules and taking bad trades, not because the setup was good, but because he was desperately trying to claw back his losses. Without that data, he would have never seen it. Okay, so what did all this soul-searching and data crunching actually build? Well, it built a disciplined professional, the trader he is today, the one who now manages a fully regulated fund. And the transformation here, it's just night and day. He evolved from this super stressed out day trader who was literally glued to 5-minute charts into this calm, patient swing trader. Now he's looking at the big picture on higher time frames, he waits calmly for that perfect setup, and he's gone from trading for himself to managing a 7-figure fund for other people. But even when you think you've got it all figured out, the market has a way of reminding you who's really in charge. And Ali's dedication to risk management faced the ultimate test during a shocking, once-in-a-generation market event that nobody saw coming. So, when the Swiss National Bank suddenly announced they were unpegging their currency from the euro, the market moved so fast, so violently, that his broker just couldn't get his stop-loss filled at the price he wanted. A trade where he had risked a super disciplined 1% of his account ended up losing 5.5%. It was a brutal lesson in just how unpredictable things can get and why keeping your leverage low is absolutely non-negotiable. And through all of that, he's built this incredible track record. I mean, it's just defined by longevity and consistency. He was profitable for 11 out of 13 years as a day trader. And now he manages a huge fund and is one of only 3 original traders at his firm still profitably managing money. That right there is a testament to his principles. All right, so after walking through this whole 22-year journey, what are the biggest lessons we can actually take away from Ali Crooks? Let's try and boil his entire career down to the core principles that really matter. What's so fascinating is that for Ali, success isn't about finding some magical chart pattern. It all comes down to these 3 psychological pillars. First, resilience. Can you take a few hits and still stick to your game plan?
Second, long-term thinking. Can you accept that today's results are basically random, but trust that your edge will play out over hundreds of trades? And finally, self-awareness. Having the guts to look in the mirror and fix your own mistakes instead of just blaming the market. And this might be my favorite piece of advice from him because it feels completely backward from what you'd expect. He tells new traders to start by risking an amount that's so small it almost feels pointless. Why? Because when the money doesn't matter, you take fear and greed right out of the equation. And that lets you focus only on executing your strategy perfectly, which is the only thing you should be worried about in the beginning. So these are the actionable rules, right? The things he lives by every day in the markets. Always keep that long-term view. Use data to prove your process works. Learn to let your winners run instead of snatching tiny profits. Remember that resilience is a muscle you have to build. And finally, stop the information overload. A few great sources are way better than 100 noisy ones. And we're going to end on the single most powerful question Ali thinks every trader needs to ask themselves. It's a question that really defines his entire journey, from that naive, greedy beginner to the data-driven pro he is today. It forces you to stop looking for answers on your charts and start looking inward, which, as Ali's story proves, is where the real answers were all along. So, how does a guy go from being a world champion video gamer to a Wall Street strategist who manages over $32 million? I know, it sounds like something out of a movie, but it's the real-life story of Atu Kokkola. In this explainer, we're going to break down his pretty wild journey and the skills that, surprisingly, transferred from one world to the next. Just look at this. On one side, you've got the elite gamer. We're talking #1 ranked World of Warcraft team in the world, with over 10,000 hours poured into mastering the game. And on the other, an award-winning trader, an expert in a super specialized field. So the big question is, are these two worlds really worlds apart? Or is there a thread that connects them? Well, we're about to find out. So here's how we're going to break down his story, kind of like a 5-act play. We'll start with his origin story as a gamer, then follow his call to adventure into the new arena of trading. We'll see his trial by fire, how he completely transformed his approach, and finally, we'll distill all that wisdom into a playbook that we can all learn from. All right, so first up, let's rewind all the way to the beginning. Because before Atu was analyzing markets, he was analyzing game mechanics and forging the exact kind of discipline that would later make him successful, all inside a virtual world. I mean, just let that number sink in for a second. 10,000 hours. From 2005 to 2009, when he was just a teenager, he basically skipped school to become the best at player versus player combat in World of Warcraft. This was not a hobby, okay? This was a total obsession, a full-time job that built the foundation for the insane work ethic he'd need down the road. And what's wild is how he did it. He didn't just play for hours on end. No, he had a system. He started out like a student, watching videos of the top players, literally breaking down their every move. Then he would practice those techniques until he was better than them, and eventually he became the teacher, making his own strategy videos that got millions of views. It's this cycle of learning, mastering, and then innovating that we're going to see again and again. But, he's the first to tell you it wasn't some solo mission. He gives a ton of credit to his team, a bunch of other super-driven players he met completely by chance. And this is a huge takeaway. In any complex, competitive field, your team is everything. They give you new perspectives, they challenge your bad ideas, and they spot weaknesses you'd totally miss on your own. This idea of collaboration, it becomes absolutely essential to his trading career.
But, even for the best, things change. His interest in gaming started to fade. Esports just wasn't the career path back then that it is today, and he wanted something more. And this is where he gets the call to a totally new and way riskier arena.
So the light bulb moment actually happens while he's in the army. A buddy of his points out how similar high-level gaming is to trading, all the strategy, the psychology, the split-second decisions. He tells him to read this book, Market Wizards, which is legendary in the trading world. And that was it. Otto is completely hooked. By 2012, he dives right into the deep end, trading foreign currencies with real money. Now, when most people get into trading, what's the first thing they hear? Start with a demo account. Use a paper trading account. Don't risk real money until you know what you're doing, right? So you think Atu followed that advice. But nope, absolutely not. His view on this is so direct, and it kind of makes sense. He believes trading is, at its core, an emotional game. That fear when a trade goes against you, the greed you feel when it's going well, you just can't fake those feelings without real money on the line. For him, learning to manage his own psychology was just as important as the strategy, and that meant he had to have skin in the game from day one. And while that decision to jump straight in with real money, it leads directly to his ordeal, a really painful, humbling experience that would ultimately shape him into the trader he is today. This was his trial by fire. And here's the really dangerous part. He started making money right away. But he's totally honest about it. It was pure luck. The European debt crisis was happening, which created these huge, predictable swings in the euro versus the dollar. He was just riding the wave thinking he was some kind of genius, but he didn't have a real strategy. And as any trader knows, the market has a nasty habit of humbling people who confuse a lucky streak with actual skill. And that humbling moment, man, it came in 2014. He was convinced the Russian ruble was about to collapse, so he bet big against it. He went heavily short. But what he didn't plan for was a surprise attack. Russia's central bank stepped in and unexpectedly jacked up interest rates, which sent the ruble soaring against him. The result? A massive, gut-wrenching drop in his account. He was right about where the ruble was heading long-term, but his timing and his lack of risk management almost wiped him out completely. And this right here, this is the million-dollar lesson. That one brutal experience taught him something so profound. In the markets, your opinion means nothing if you can't manage your risk. You can be 100% right about the future and still go broke before you get there. This became the bedrock of his entire philosophy moving forward. So what do you do after a hit like that? Well, Otto didn't quit. He rebuilt. He went from making these huge risky bets based on his opinions to building a disciplined, repeatable system from scratch. He made a huge call in 2015. He decided, consciously, to stop trading based on his gut. Instead, he would only focus on things he could actually research and measure, central bank meetings and major economic news. He realized that's what really moved the markets, and if he could master those specific events, he'd have a genuine edge. So what did this new system look like? Well, he basically went back to what worked in gaming. He built a team to bounce ideas off of and keep an eye on the constant flow of news. He did a deep dive into liquidity, which is really about understanding how money moves from the markets. He created smart rules for when to take profits, and crucially, he started sizing his trades based on conviction. He'd only bet big when the data told him the odds were truly in his favor. And when I say he did the work, I mean, look at this number. He and his team built their own library of over 3,000 meticulously researched market events, some of them going back 30 years. Remember those 10,000 hours in World of Warcraft? This is the exact same obsessive dedication, just pointed at the financial markets. You know, there's this really important idea he lives by, especially now that he manages money for other people. It's called skin in the game. The basic idea is that you should only trust people who actually have something to lose from their own advice. Otto embodies this. He invests a huge chunk of his own net worth right alongside his clients in his fund. So if they lose money, he loses money. It perfectly aligns his interests with theirs and makes sure he feels the weight of every single decision. All right, so after all that, the gaming grind, the huge loss, the rebuilding from the ground up, what are the big takeaways? This last section is his playbook, the core principles he pulled from both the virtual battlefield and the real-world financial markets. It really comes down to these three pillars. First, there are absolutely no shortcuts. The 10,000 hours, the 3,000 researched events, that proves it. Second, don't try to do it all by yourself. Just like his gaming squad, a good team is vital for support and different points of view. And third, you have to have a crystal clear, rules-based strategy and then the discipline to execute it calmly without letting your emotions take over. That's the key. And just to make sure you really get how tough this is, he often brings up this quote from the legendary investor Bernard Baruch. It's a real reality check. Trading is not a get-rich-quick scheme. It demands the same level of obsessive focus as becoming a surgeon. You have to be ready to give up pretty much everything else for just a ghost of a chance. And that really brings us to the final question. Otto's story, from gamer to trader, is an incredible testament to the power of deep, obsessive focus. It just goes to show what's possible when you find that one thing you're willing to dedicate yourself to completely. So, the question isn't just about trading, it's about mastering anything. I'll leave you with this. What are you willing to commit 10,000 hours to? All right, let's dive into the incredible story of Andres Granger. This is a guy who went from losing money for 2 straight years to managing a crypto fund worth millions of dollars. It's a journey of pure grit, discipline, and a couple of simple changes that honestly made all the difference. So let's just start with this number, $10 million plus. That's the value of the crypto fund Andres is managing today. So the big question is, how in the world did he get here? Because let me tell you, it was not a straight shot to the top. For a very long time, it was the exact opposite. And this right here is what makes his story so relatable. Andres himself says, hey, I'm not some kind of genius. His journey isn't about some secret formula that only a few people can ever figure out. No, it's a story about persistence. It's about grinding through those really tough times and just finding a process that actually works. So how did he pull it off? Well, we're going to break down his entire journey for you. Here's our roadmap. We're going to start with what pushed him to leave the corporate world in the first place. Then we'll walk through that brutal 2-year losing streak, and we'll pinpoint the exact moment things finally turned around. From there, we'll peek inside his toolkit, look at the new challenges of managing a massive fund, and then wrap up with the biggest lessons you can take away from all this. You know, every big change in life starts with a really powerful why. For Andres, the motivation to jump into the super high-risk world of trading, well, it came from a deep unhappiness with the alternative, the traditional 9-to-5. So picture this. He was working for a major company in South Korea, and he was facing this totally exhausting corporate culture. It meant having to show up by 7:30 in the morning, way before the sun came up in the winter, and then leaving long after it's set. He literally described it as going to work in the pitch black and coming home in the pitch black. The work itself was just stressful, and that routine, relentless. And that whole experience just pushed him to find an escape. He realized that, yeah, trading was also incredibly challenging, but there was one huge difference. He actually found it fun. It was like a mental puzzle that kept him sharp and engaged, which was a world away from the soul-crushing grind of his day job. That was the spark he needed to take the leap. But look, escaping the 9-to-5 was one thing. Actually succeeding in the markets, that was a whole different beast. His journey was anything but an overnight success. In fact, it started with a long, painful period of just failure. His story started like a lot of others. He made his first trade at 18, but the real grind began while he was still working that grueling 10-hour-a-day job. And for the first 2 full years, it was just brutal. He called it drawdown after drawdown. I mean, almost every single time he touched the market, he lost money. It took him over 2 years just to get to the point where he was breaking even on commissions. And even then, he still wasn't making enough to cover his $100 a month data fees. During this period, he had one trade that was so devastating, he says the experience is just engraved in my memory. He was trading the DAX, a major German stock index, and decided to short it, basically bet its price would fall, right near the daily high. It was a single trade, and it ended up costing him $1,300. Now, back then, that was an absolutely astronomical amount for him. He wasn't even having $1,000 losing months. And get this, that entire $1,300 loss happened in just 12 seconds. As soon as he clicked his mouse to get in the trade, the market randomly spiked up 37 ticks in a single second. It was so fast, his stop loss, his automatic safety net, it didn't even have a chance to trigger. The market just blew right past it. He described it as a total deer-in-the-headlights moment. He just froze. After a few seconds, he managed to manually close the position, but the damage was already done. His confidence was completely shattered. That one trade messed with his head for months, making him super cautious and worried. But it also became an absolutely critical learning experience. Okay, so after that devastating loss and 2 years of just constant struggle, something had to change. And this brings us to the most crucial part of his story, the turning point. It wasn't a new magical strategy. It wasn't some secret indicator that finally made him profitable. It was something way simpler and way more disciplined. So what was it? What was the shift that took him from consistently losing money to finally seeing consistent profits? I mean, how did he break through that wall? Well, the answer is a masterclass in discipline. He started recording every single one of his trading sessions on video. Then he would go back and review the footage, especially of his losing trades, and he'd play them back at a quarter of the speed. This let him spot what he called error trades, obvious mistakes like clicking the wrong button or forgetting to cancel an order he should have. By identifying and then systematically getting rid of these simple, unforced errors, he finally became profitable. The skill was already there. It was the discipline that was the missing piece of the puzzle. So once he turned that corner and got profitable, he started developing and refining the strategies that would eventually become the foundation of his whole multi-million-dollar fund. So let's take a look inside the actual toolkit he uses to navigate the markets today. His fund basically offers two core strategies. The first is market neutral. The goal here is to profit from these tiny price differences between related assets, a strategy called arbitrage. So he's not guessing if the market's going up or down. The returns are smaller, they're not as exciting, but they can be incredibly consistent. The second is directional, or trend following. This is what most of us think of as trading, betting on a market to go up or down. The potential returns here are much, much higher, but Andres describes the losing streaks as just soul-crushing. Now, to execute these strategies, he relies on a pretty specific set of tools. He says a professional order book platform like Bookmap or Quantower is absolutely essential for seeing the real-time flow of buy and sell orders. He uses a tool called Grafana to create his own custom alerts and track key metrics. And for crypto-specific data, he recommends a free resource called Koehn. He checks it every single day for crucial info like liquidations and open interest, because that stuff gives him a read on market sentiment and, where other traders might be getting squeezed out of their positions. You'd think reaching the level of managing a $10 million plus fund means the challenges go away. Nope, they just change. In fact, managing big money creates a whole new set of really complex problems you have to solve. The single biggest challenge he faces now is just execution. See, when you need to buy or sell millions of dollars worth of an asset, you can't just click a button. If other large, predatory funds see your massive order pop up, they can actually trade against you, pushing the price in the wrong direction before your order is even filled. So a huge part of his job now is figuring out how to get his trades done without being noticed. It's this high-stakes game of cat and mouse. And he doesn't solve these problems by himself. A huge part of his success came from networking. He actually met his current lead developer in a paid Discord community for professional traders. Andres was the market-neutral arbitrage guy, and his future partner was a quant trader who focused on trend following. They were a perfect match, and they combined their different skills to build the automated systems that run the fund today. So after hearing this whole journey from the grueling 9-to-5 to years of losses all the way to managing a major fund, what are the key lessons we can actually take away from his experience? Let's break down his core principles. It all really boils down to four things. First is discipline, which he sums up with the rule, the first cut is always the cheapest. Just get out of bad trades fast. Second is that game-changing process of review. Record everything and analyze your actions, not just your results. Third, team building. Trading at this level is a people business, not some solo mission. And finally, strategy. Remembering that you don't always have to chase big trends. Consistent, market-neutral strategies can be just as powerful. But beyond all the strategies and principles, there's something deeper that drives elite performers like Andres. He shared this unbelievable story about a legendary floor trader named Charlie DiFrancesca. After getting a terminal cancer diagnosis, Charlie apparently told his bank he was investing millions with them and asked if they could just keep him alive for another 8 months, simply because he loved trading that much and wanted to keep doing it. It's just a powerful reminder that for the best in the world, this is so much more than a job. It's a lifelong passion. And that brings us to the end. Andres Granger's path really shows that success in a field this competitive isn't about being born a genius. It's about enduring the struggle, finding a process through disciplined review, and connecting with the right people. So the question for you is, when you look at his core principles, discipline, review, and networking, which one of those lessons are you going to apply first to your own goals?
All right, let's dive into the story of a trader who built his entire career on a pretty wild idea, Jean-Francois Boucher. His whole philosophy is that to actually win in the markets, you first have to get really good at losing. It's a journey that took him from total financial ruin to managing an 8-figure family office. It's quite a ride.
And this quote, "This is the whole puzzle right here." It sounds completely backward, doesn't it? Learn to lose to succeed? But as we're about to see, this isn't just some catchy phrase. Nope, it is the absolute foundation of his entire trading system, both mechanically and psychologically. So how does someone even arrive at a philosophy like that? Well, like a lot of the best lessons in life, he learned it the hard way. I mean, the really hard way. His story doesn't start with some small mistake. It starts with a massive, ego-inflating win, followed by a fall that cost him literally everything.
And what's just crazy is how fast this all happened. So in '98, he's an employee. He gets into this IPO for Celestica. By 2000, those shares have gone from $16 to $128, an absolute home run. He suddenly has a nice little nest egg, and he thinks, this is it. This is my ticket out of my 15-year career at IBM. But by 2006, after just 8 or 9 months of trading options, it was all gone.
$250,000. Just poof, gone in less than a year. See, he was playing with really complex stuff, selling calls and puts on .com stocks like Amazon, basically making huge bets without a real escape plan. And then the market just turned on him, and it all blew up in his face.
And this, right here, this gets to the heart of the real problem. It wasn't just about the money. It was a full-blown psychological crisis. You have to remember, this was a guy who'd been a winner his whole life, hired by IBM at 18, made more money than anyone he knew. Failure just wasn't part of his identity. So the shame was so intense that he just couldn't tell anyone.
And the fallout from this, I mean, it was devastating. He's hiding the mail, grabbing the phone before his wife can, just trying to keep the secret. Until one day, she answers, and it's the broker on the line, demanding their money. And that one phone call just unraveled his entire world. It led to a divorce, they had to sell their home to pay the debt, and he had to pack up and move clear across the country to Jasper, Alberta, to start from scratch.
But you know how these stories go. Hitting absolute rock bottom. That was the moment everything started to change. It was out there in the quiet of Jasper National Park, completely removed from his old life, that he began the long, slow journey of rebuilding. Not just his bank account, but his entire approach to trading, and really to himself.
So there he is, trying every indicator, every strategy you can think of, and just getting nowhere. He was stuck, trying to force himself to be a trend trader, but it just wasn't clicking with his personality. And then he connects with some mentors from a group called the Apiary Fund, and they give him this one piece of advice that changes everything.
And boom, that was it. The total light bulb moment. It was like they gave him permission to stop fighting himself. For years, he'd been trying to be this trend-following guy because that's what all the books said to do. But hearing, just trade the facts. If the market's going sideways, trade it sideways. That was the key that unlocked the entire puzzle for him.
So you gotta understand, this wasn't some overnight success story, not even close. He spent the better part of a decade in what he just calls mayhem, trying everything, blowing up accounts, figuring out all the ways not to do it. It was only after about 10 years of grinding it out that things finally started to click and he found real, consistent profitability.
And then, in this really strange twist of fate, something terrible happened that actually turned out to be the key to his success. He was diagnosed with leukemia, and because of his treatment, he had to stay home, away from crowds. This awful situation handed him the one thing he needed more than anything: thousands of hours of focused, uninterrupted screen time to hone his system into the razor-sharp strategy it is today.
All right, so this brings us to the really juicy stuff, the 3 pips system. And this is where it all starts to sound a little crazy. His method is built on just radical simplicity and a way of managing risk that flies in the face of pretty much everything you've ever been taught about trading.
He calls it the power of one, and it's so simple it's almost genius. He trades one thing, the Euro USD, on one time frame, the 1-minute chart, at one specific time of day. He aims for one target, just 3 tiny pips, and he has one stop loss. By locking in every single one of those outside factors, he basically eliminates all the noise. What's the only thing left that can change? Him, the trader.
And this is where he just throws the trading rulebook out the window, right? We're all taught, don't try to pick the top, don't try to catch the bottom. Well, Boucher's entire system is designed to fade the edges of a range, which means he's doing exactly that. He's stepping in right at those tops and bottoms that everyone else is told to run away from.
So get ready for the most mind-bending part of this whole thing. On the left, that's what we all learn, right? Risk $1 to make 2, or risk 1 to make 3. A positive risk to reward. On the right, that's Boaster's world. He flips it completely upside down. He will regularly risk 4 times more than he's trying to make. His risk to reward is backwards. So how in the world can that possibly work? The secret is that he doesn't see his stop loss the way everyone else does. For most traders, a stop loss is an eject button, a point of failure. For him, that 36 pip stop, that's his entire workspace. It's his playground. He calls it a long tail stop, and it's designed to be wide enough to just absorb all the random noise and jerky movements of the market, giving him room to breathe and manage the trade.
So here's how he does it. He doesn't just jump in with his whole position. He starts small, with just a tiny piece of his total risk. Let's say he buys at a price of 100. If the market goes against him, maybe drops to 98, he doesn't panic. He just adds another piece. Now his average entry price isn't 100 anymore, it's 99. The market doesn't have to rally all the way back to 100 for him to win. It just needs a little bounce for him to get his 3 pips or get out at break even. He calls this engineering break even. It's brilliant.
You know, when you really look at it, this whole trading system, it's way more than just a bunch of market rules. It's really a life philosophy, one that was forged in failure, in illness, and in a long, slow recovery. It's about taking control, having discipline, and truly understanding yourself. And this just brings everything full circle, doesn't it? The same illness that gave him the time to perfect his trading also gave him a totally new perspective on life. His goal wasn't just about piling up money anymore. It became about giving back, or as he puts it, sending the elevator back down to help other people who are struggling on that same path he was once on.
So if we boil this whole incredible journey down, what are the big takeaways? Well, it really comes down to these 4 things. First, master losing. Stop chasing profits and focus on managing the downside. Second, be specific. That insane consistency is what creates your edge. Third, use prop firms as an insurance policy for your own money. And finally, and this might be the most important one, failure is just data. Your biggest losses aren't tragedies, they're your best teachers.
So I'll leave you with this one last thought. Jean-Francois's entire career, his wealth, his whole philosophy, it was all built on the ashes of his most painful failures. It really makes you stop and think, doesn't it? What is your biggest loss, in trading or in life, trying to teach you? What's the data that's hidden in your own failures, just waiting for you to find it?
How about this? What if I told you that you could literally fail your way to a 6-figure income? Sounds kind of crazy, right? Well, it's the true story of a trader named Austin Silver. Today, we're going to pull back the curtain on the prop trading secrets that turned more than 15 failed attempts into an incredibly successful business. Let's get into it. Just let that sink in for a second. These are Austin Silver's own words. I failed over 15 challenges in order to get paid out. So right off the bat, you know this isn't some story about an overnight success or some trading guru who never lost. Nope, this is a real, raw look at what grit and resilience actually look like and learning from a lot of mistakes. So that's the big question, isn't it? How on earth does a trader go from just blowing up account after account to building a legitimate 6-figure business around his trading? Well, that's the story we're going to unpack today. We're going to walk you through his entire journey, step by step, from all those painful losses to the one pivotal breakthrough that changed everything. All right, so let's rewind the clock and go back to the very beginning. You see, Austin didn't come from some fancy Wall Street family. His journey into the world of trading was, believe it or not, a complete accident. And it started in a place you would probably never, ever guess, the DJ booth. When you look at his path, you can tell that entrepreneurial spirit was always there. I mean, he started out as a DJ for private events before kind of shifting into a more traditional sales gig in finance. But the real light bulb moment happened in 2015. While he was studying for his Series 7 license, the exam for stockbrokers, he just stumbled upon day trading. And for him, it just clicked. He saw this path to the 2 things he really craved: time freedom and serious income potential, way beyond what his sales job could ever offer. And get this, he did this completely on his own. He dropped out of college, which, as you can imagine, his parents were not thrilled about. He had no mentors, no real-world support system to guide him. So what did he do? He had to turn to the internet, following people online, just trying to piece it all together and carve out his own path from scratch. But this new path, well, it wasn't exactly paved with gold. For 2 solid years, his trading journey was defined by pretty much one thing: losing money. But looking back, this brutal period of failure was basically the price of his real education in the markets. And let me tell you, tuition was expensive. He started out really small, using these unregulated brokers that offered just insane leverage. He'd deposit $100 here, maybe 75 there, and then another 100. But every single time, the result was exactly the same. He'd blow up the account. For 2 straight years, this was his life. Just this frustrating, soul-crushing cycle of small deposits and quick, painful losses. Now, the reason for this constant failure is so important. He had zero risk management. He had no idea how to manage a trade once he was in it. And he didn't have a real repeatable strategy. He was just caught in this loop of buying online courses. He even admits he accidentally bought the same course twice, and then just losing money in the market. It's a trap that, let's be honest, so many new traders fall right into. So, what gives? What finally changed? Well, after 2 years of banging his head against the wall, he had this massive breakthrough. He realized the problem wasn't his strategy or the market or anything like that. The problem was something much deeper, something inside him. This chart just lays out the whole mental shift perfectly. You've got the losing trader on one side, that was him. He hated being wrong, so he'd move his stop loss to avoid taking that L. But the winning trader, they accept that being wrong is part of the game. They respect their stop loss. It's the huge difference between letting your ego drive your decisions versus letting your system drive them. He had to kill his ego to have any chance of becoming profitable. So, what was the one single action that was causing all this pain? It was moving his stop loss. It seems like such a simple little click, right? But it's a decision that's driven entirely by your ego refusing to admit you made a mistake. And that one little click consistently, almost guaranteed, turned a small, manageable loss into a catastrophic one. And if you need a number to really hammer this lesson home, here it is. On a single trade using his own money, he lost $32,000. And why? Because he was in a trade he knew he shouldn't be in. And he just kept moving his stop loss down and down and down, refusing to accept he was wrong until the pain was just unbearable. So you see, the fix wasn't some new secret indicator he found. It wasn't a new strategy. The fix was entirely internal. He had to humble his ego through some serious self-work. We're talking meditation, reading, and just fundamentally accepting that in the game of trading, being wrong is totally okay. It's just part of the process. The goal isn't to be right all the time. The goal is to be profitable. Okay, so armed with this brand new mindset, he found the perfect vehicle to apply it: proprietary trading firms, or prop firms as everyone calls them. Now, these are basically companies that will fund traders with their own capital and then you split the profits. For Austin, this was the moment he stopped thinking like a gambler and started acting like a CEO. Now, his approach to these prop firm challenges is where his business brain really shines. And honestly, it sounds completely backward at first. Instead of just buying one challenge and being super careful, he treats it like a marketing budget. He buys multiple challenges at the same time. He risks aggressively to pass them. And here's the kicker. He fully expects and accepts that he's going to fail most of them. The whole goal is just to get funded on one account, because that one successful account will pay for all the failed attempts and then some, leading to a net profit. And this quote from him just says it all. Stop attaching your self-worth to one challenge, one trade, one funded account. Relax. It's not your own personal money. Once you pay that fee for the challenge, that is the only money you can possibly lose. Everything after that is just a numbers game, a business expense. And the result of this whole entrepreneurial approach, did it work? Oh yeah, it worked. It led directly to over 6 figures in payouts from prop firms in a single year. By just taking his ego out of the equation and treating those challenge fees like a cost of doing business, he unlocked a level of success that he just couldn't touch for years. So let's boil this entire journey down. What's the core philosophy that drives his consistent success day in and day out now? What are the keys to the kingdom? Here they are, the keys to his whole system. First, simplicity is repeatable. He focuses on just one market, the ES futures, and one core indicator, VWAP. That's it. Second, self-regulation is everything. He knows the goal isn't to win more trades, it's to lose less money by avoiding that emotional state of tilt. Third, you have to think like an entrepreneur. You need to diversify your income so you never feel that insane pressure to make your rent money from a single trade. Fourth, know yourself. He takes partial profits early because he knows it protects his own psychology from doing something stupid. And finally, study your losses. Accountability. That is where all the real growth happens. And this, right here, might be the biggest takeaway of all. The goal shouldn't be to just become a full-time trader. The real goal should be to become a full-time entrepreneur who also trades. Trading becomes one powerful income stream in a much larger, much more resilient business that you're building.
So we'll leave you with this really powerful question that Austin asks himself before he takes any valid trade setup. Will I be more upset if I take this trade and lose, or if I don't take it and it wins? When the fear of missing out on a great setup becomes bigger than the fear of taking a small, well-managed loss, that's when he takes the trade. It's a simple little gut check that perfectly separates systematic trading from emotional gambling.
Today, we're diving into the incredible journey of trader Elisa Morris. And look, this isn't some story about a secret formula or a magic indicator. Nope. This is a real-world blueprint for how relentless grit and a pretty massive mindset shift can lead to some absolutely incredible success in the markets. So let's just start with this number right here. $8 million. That is the amount of capital Elise now manages. It's a huge number, right? And it immediately makes you ask, okay, how? How does anyone go from starting out with a small personal account to being trusted with that level of capital? Well, the answer isn't where you might think. You're not going to find it in a fancy finance degree or some Wall Street internship. Her story was actually forged in a place of scarcity, juggling multiple jobs and fueled by a motivation that was way, way more powerful than just making money. And here it is. This was her reason, her daughter. As a new single mother, her time, especially time with her child, was the most precious thing she had. She just knew she had to find a path where her efforts could actually grow for her, instead of her just trading away her time for a paycheck. Okay, so let's get into this first part, because to really understand her success in the markets, you first have to grasp just how intense her life was before she ever placed a single trade. This is where that relentless drive really came from. I mean, just look at this timeline. This lays out a life of just non-stop work. And we're not just talking about being busy, this was a survival-level hustle. Can you imagine working 2 different service jobs while pregnant, saving every single penny just so you can take an unpaid maternity leave? Then you go back to work at a warehouse, only to realize that daycare costs more than you even make. So what do? She started driving for ride-sharing services at night while her daughter was sleeping just to make ends meet. It's incredible. And it was this exact pressure cooker of financial strain that became the catalyst for everything. She realized a regular 9-to-5 just wasn't going to be the path to the life she wanted for her and her daughter. So, back in 2017, she started researching ways to actually grow her money, not just earn it. And that's what led her to trading. Now, once she found trading, it was anything but an overnight success story. I mean, she approached it with that same intense discipline she had in her work life, but she very quickly learned a really hard lesson about this industry. And this right here, this captures the first major hurdle for basically any new trader. So many people are looking for that magic formula, that quick, easy path to wealth. Elise saw this everywhere. She even said that while plenty of people out there will warn you about the risks and the struggle, people often choose to listen to the person promising easy money. But she chose to face the reality head-on. So instead of looking for those shortcuts, she actually built a process. She started with courses just to get the absolute basics down. Platforms, brokers, how to even place a trade. But she didn't stop there. She knew how valuable mentorship was, so she found someone to help her build a solid beginner's foundation. And then, as she grew, she leveled up, seeking out a more advanced mentor for the really complex stuff. It was this structured, layered approach to her education. Okay, so now we get to the real core of her transformation. Forging a strategy. And this wasn't something she just learned from a book. No, this was forged in the fire of trial, error, and one particularly painful but totally career-defining lesson. Every trader has that one trade they'll never, ever forget. For Elise, it was a gold trade early in her career. She just got attached to her own idea of where the market should go, her bias. She completely ignored the evidence, telling her she was wrong, and she just held on, hoping and praying for a reversal. And the result? She wiped out months of hard work and progress in just a single trade. Ouch. That really painful loss forced a fundamental mental shift. She had to move away from trading based on emotion and hope, that desperate need to be right. And instead, she developed this logical, systematic approach based on if-then scenarios. If the market shows me X, then my predetermined action is Y. It totally removed her ego from the entire decision-making process. And that system, well, it crystallized into a set of what she calls her non-negotiables. And these weren't just guidelines. They became the absolute bedrock of her strategy. She defined exactly what she would trade, when she would trade, and her precise entry parameters. And her number one rule, born directly from that painful gold trade, was to never ever chase the price, period. Instead, she learned to wait for the setup to come to her.
So, with her strategy defined and her discipline razor sharp, Elise set her sights on a huge goal, going pro. But she knew she couldn't just up and quit her warehouse job to become a full-time trader. No, she needed a rock-solid plan. And just look at how tangible and methodical this plan is. First, she set a goal to consistently make her daily salary from trading. Check. Once she hit that, she leveled up, make her entire 2-week paycheck in just 1 week. But that final step, that was the most critical part. She did all of this while still working her day job. And for 1 full year, she stacked and compounded every single penny of profit without taking a single withdrawal. That's how she built her financial cushion. That is some serious discipline. And you know what? That incredible discipline and her proven track record, it didn't go unnoticed. An opportunity came up to audition for a venture capital firm that was specifically looking for retail traders, especially women, to bring into their fund. Her consistency is what got her foot in the door.
Now, this table highlights the massive mental shift you have to make to go from trading your own money to managing millions for a fund. As a retail trader, right, your main focus is usually growing the account as fast as possible. For a fund, nope. The number one priority above all else is protecting their capital. Your risk tolerance just plummets. And get this, a consistent monthly return of just 1 to 2%, which might seem kind of low to a retail trader, is considered excellent performance at that level. It's a whole different ballgame.
So what's the ultimate lesson in all of this? I mean, after we peel back all the layers of her strategy, her discipline, and her journey, it really all comes down to one core concept. And it's not some secret chart pattern. It's a very specific and powerful mindset.
This quote right here gets to the very heart of her philosophy. For Elise, success isn't measured by the P&L on any given day. Success is measured by execution. Did you follow your rules? Did you stick to your plan? Because think about it, a profitable trade that you took with bad habits is actually a failure. It just reinforces a behavior that will eventually blow you up.
And this is her core philosophy in a nutshell. Progress over results. It's all about playing the long-term game, building good habits, staying disciplined day in and day out. The profits, well, they just become a byproduct of a well-executed process, not the goal itself.
So after everything she's been through, from those devastating losses to managing millions of dollars, what does she believe is the single most important trait that a successful trader has to have? The answer is this one word: resilience. It's the ability to take a hit, absorb the lesson, and get right back up to execute your plan the very next day. See, it's not about avoiding losses. That's impossible. It's all about how you respond to them. And here she is confirming it in her own words. Every single successful trader she knows, it doesn't matter what their style is, they all share this one trait. They get the tough times and losing streaks are just part of the game. And resilience is what allows you to see past those frustrating moments and stick with it for the long run.
You know, Elise's worst trade ended up creating one of her most important rules. It forced her to shift from trading on hope to trading with a system. It's just such a powerful reminder that our greatest moments of growth often come directly from our biggest failures. So, the question I want to leave you with is this: what's the one rule that your hardest lesson taught you?
Imagine this. You withdraw over $300,000 from your trading accounts, and you do it in just 85 trading days. Well, that's not some hypothetical scenario. That's exactly what prop trader Matthew Miller, who you might know as Trades by Matt, actually did. So in this breakdown, we're going to get into his entire journey, from his very first fumbling trade to the super specific strategies and hard-won secrets that led to his insane success. Let's get inside the mind of the 300K scalper. All right, here's our game plan. We'll start with those staggering results just to set the stage. Then we'll hit rewind and check out his unlikely beginnings. We'll follow his big pivot from crypto into the futures market. And then we're going to deconstruct the exact A-plus trading setup he patiently waits for. After that, we dive into the psychology of it all. And finally, we'll boil it all down to 3 huge secrets for success.
So yeah, first up, let's just take a moment to really establish the results we're talking about. Because these numbers, well, they're the reason we're all here, right?
$309,000. Just let that sink in. And let's be super clear. This isn't paper profit or an account balance. This is real withdrawn cash, money in the bank. And it happened in just 85 trading days. You know, a result like that, it's just not luck. It's the end product of a killer strategy and almost superhuman discipline. So you're probably thinking, okay, this guy must be some Wall Street prodigy born with a silver spoon and a finance degree. But nope, not even close. He was a supply chain management major in college. He actually said he hated his intro to finance class. So the big question is, how on earth did he get here? What was his secret path, and what can we learn from it? Let's move on and see how this all started, because his journey really didn't begin with a love for the markets. It actually started with a super practical, money-first kind of mindset. You can see the pattern right here. From a young age, Matt was all about making smart money moves. I mean, wanting to jump from $8 an hour at Best Buy to 15 at In-N-Out, that's a big deal. Then in college, he picked his major because it had a 99% job placement rate and a great salary, practical. His first trade at 18 was, well, a classic rookie mistake, buying GoPro at the very top. But that little loss lit a spark. And later on, that spark turned into a full-blown crypto obsession. And that obsession, it paid off, big time. He's the first to admit a lot of it was luck. He caught that monster crypto bull run where it seemed like you couldn't lose. But still, turning a few $100 into $10,000, that changes things. It was real proof that this trading thing could be more than just a game. And using that money for his wife's engagement ring, well, that pretty much sealed the deal. But here's the thing. The wild, wild west of crypto, it wasn't built to last for him. To get the kind of consistency he was looking for, he had to make a huge pivot into a more structured, regulated market. And honestly, this move changed everything. I mean, just look at the difference. Crypto was total chaos. He had to deal with stuff like spoofing, where huge fake orders are placed to manipulate the price. Plus, he had the constant worry of exchanges getting shut down. He needed stability, and that's what futures gave him. A regulated central market, no pattern day trader rule, and, this is key, the ability to focus on mastering just one thing, day in and day out. And you want to talk about getting a sign that you made the right choice? On his very first day trading futures, he made $1,000. He even put it on YouTube. That was it. That was the green light he was looking for. He'd finally found his arena. Okay, so we've talked about the why. Now let's get into the how. What's the actual strategy that's making the money? Let's break down his specific, repeatable A+ setup. This is the absolute core of everything he does. The most important thing to get here is that he's not trading off just one signal. He waits for what he calls confluence, where everything lines up perfectly. So, step 1, the price breaks out of the first hour's range. But, and this is so important, he doesn't chase it. He waits for it to come back and retest that level. That's when he starts paying attention. Then he looks for a hammer candle on the 1-minute chart. And for the grand finale, the last piece of the puzzle, delta has to go parabolic. So what is this delta thing? It's the secret sauce. See, it's not a lagging indicator. It's a real-time view of the battle, the tug of war between buyers and sellers. So when he sees delta just exploding upwards, that's his confirmation that aggressive buyers are flooding the market. It's the final green light he needs to pull the trigger. And to watch all this happen, he's got a very specific toolkit. Each chart has a job. He's got the 5-minute for the big picture, the 1-minute for spotting those hammer candles, and a DOM, the depth of market, to see the live order flow. But the really cool one is his 22 range chart. It doesn't print candles based on time, it prints them based on price movement, which gives him a brilliant view of the real speed and aggression in the market. Okay, so you can have the best setup in the world, right? But as any trader will tell you, the real battle is the one that happens right between your ears. So let's get into the mindset and the hard rules that protect him from himself. I absolutely love this quote because it perfectly sums up his whole philosophy. He's not trying to hit a grand slam home run. He's not chasing those huge, risky moves. He is all about grabbing those small 10-point wins, the breadcrumbs. He knows that if you just keep collecting those breadcrumbs day after day, you end up with a pretty nice loaf of bread. And this might surprise you because he's waiting for that perfect A+ setup. He actually doesn't trade that much. On his prop accounts, he might only take 2 to 4 trades a day. Some days he's taking less than 10 trades total. It just shows you how patient he is. He's not a machine gunner. He's a sniper, waiting for the perfect shot. And these are not just guidelines. These are non-negotiable rules that he for sure learned the hard way. He never, ever trades the first 15 minutes. He has a hard stop. 3 losses in a row, and he walks away. He's all in, all out on his trades to keep it simple and decisive. And my favorite one, he actually analyzed his own data, saw he was losing money in the afternoon, and just stopped trading then. Brilliant. All right, so if we boil this entire journey down, what are the biggest takeaways? It really comes down to 3 core secrets for his success. Secret number 1, master one thing. He trades the NASDAQ 99.5% of the time. He's not distracted by stocks or other commodities. By focusing on just the NASDAQ, he knows it inside and out. He understands its personality. It's become instinctual for him, which is a massive edge. Number 2 is his mantra. Focus on base hits. We've talked about this, but it's so critical. His goal on a prop account isn't to get rich quick, it's to make a consistent $400 a day. And how does he do that? With 2 simple 10-point trades. He knows that chasing home runs leads to strikeouts. Base hits win the game.
And finally, secret number 3, and this might be the most important one for staying in the game, be overfunded and underleveraged. On accounts where he's allowed to trade 10 contracts, he only trades 1. Why? It's all about defense. It gives him a huge cushion, so a few bad trades can't knock him out. It ensures he can survive to trade another day.
So in the end, Matt's story just proves that trading success isn't about finding some magical indicator or a secret algorithm. It's about building a solid plan, and more importantly, having the ironclad discipline and patience to follow your own rules every single day. The secrets themselves are pretty simple, but the real question is, are they simple to execute? So how do you go from running a teenage landscaping hustle to building a multi-million-dollar trading career, all by the age of 23? Well, today, we're diving deep into the story of Nick Syiek, who you might know as Trader Nick, to see exactly how he built his system, piece by painstaking piece. All right, let's just start with the number that gets everyone's attention, $3 million. Yep, that's what Nick Syiek had pulled from the markets by the time he was just 23. It's a huge number, for sure, but the real story, the one we're really going to get into, is the how. How did he actually do it? Let's be clear, this was not some story of a lottery ticket win or one lucky trade. It was a journey of trial, a whole lot of error, and just relentless system building. So to really get it, we have to start way before the markets. We have to start in his own backyard. You see, Nick's path to becoming a trader actually started long before he ever clicked buy or sell. It all began with a serious entrepreneurial streak and a pickup truck he bought off his dad. What's so wild about this is that Nick was basically learning the core principle of trading without even knowing it. Think about it. He was finding four-wheelers and lawnmowers on Craigslist, fixing them up and flipping them for a profit. He was his own little market, finding value where other people didn't see it. And that right there, that was the light bulb moment. It was actually his dad who pointed it out to him, saying, what you're doing right now, that's basically stock trading. And that one little comment was the spark that completely changed his focus from physical stuff to the financial markets. So he takes less than $1,000 that he earned from all that hard work, and he opens a Robinhood account. But his first strategy? Oh man, in his own words, it was the dumbest strategy you can possibly imagine. This really says it all, doesn't it? The difference is just night and day. He was doing all the classic beginner stuff. Buying forward because he liked their trucks, selling a winning trade for a measly 25-cent profit, and holding on to a losing Snapchat trade just hoping and praying it would come back. It's a painful process, but one so many people go through. But you know what? That early failure was probably the best thing that could have happened to him. Because he had worked so incredibly hard for that first stake, every single dollar hurt. He didn't just blow through a bunch of money, he lost a little, got humbled fast, and learned a really powerful lesson. Trading is seriously difficult. So that humbling experience is what pushed him to find a better way. And this is where his other passion, his computer science background from Auburn University, became his absolute secret weapon.
He literally stopped trading. He just put a pause on everything and went into what he calls a tinkering phase. He got deep into MetaTrader and started programming trading bots and just testing idea after idea. He wasn't even paper trading, he was just back testing like crazy. And through that process, he proved to himself there was no magic indicator, and that the real secret sauce wasn't the entry, it was all about risk management.
And by programming and testing everything, he realized just how incredibly hard it is to make even 20% a year consistently. But this led to a massive breakthrough. He figured out you could apply the same data-driven approach to economic fundamentals, not just price charts, and that's what got him focused on the big macro forces that really move the markets. So after years of this tinkering and testing, he didn't just have a vague strategy. Nope, he came out of it with a true system, a repeatable process built on 3 core pillars that he could use to analyze any market.
And this right here, this became his foundation. It's so simple, but it's incredibly powerful. He uses fundamentals and sentiment to build a strong directional bias, basically a story about where the market is probably going. And he does all of that before he even thinks about looking at a price chart to find an entry.
The key here is he didn't just rely on a gut feeling. He quantified everything. He actually built a software tool called the Edge Finder that pulls in all this data, PMAs, CPI, trader positioning, and spits out a numerical score. This gives him a systematic, data-driven view, taking a ton of the guesswork out of the equation. Okay, so having a great system, that's only half the battle, right? To actually survive in the markets with all their ups and downs, you need a set of ironclad rules that you never, ever break. This right here is probably Nick's single most important rule. It is completely non-negotiable. By risking less than 1% of his capital on any trade, he makes sure that no single loss can ever blow up his account. It gives him the breathing room to survive a losing streak, and, this is huge, it takes so much of the emotion out of the game. And just look at the beautiful asymmetry here in his strategy. Think about it. His losses are always tiny and defined, thanks to his stop loss. But his winners, they are totally open-ended. He lets the market tell him how big they can get by using a trailing stop. I mean, that is the pure essence of trend following right there. This is a professional approach. It meant he had to completely unlearn that whole get-rich-quick mentality, a philosophy that's perfectly summed up by this quote from one of his mentors, Rob Booker. It's not about hitting home runs. It's about mastering the small stuff, proving your system works, and then, only then, scaling up. And this timeline, this tells the real story. This was not an overnight success. It took him 2.5 years just to stop losing money. Even as a pro in 2022, he hit a brutal 30% drawdown. But because he was so disciplined and stuck to his rules, he survived to trade another day and ultimately came back even stronger. So really, his whole incredible journey can be boiled down into these 3 key pieces of advice. It's not about finding some secret indicator. It's all about risk management, keeping your head straight, and getting real-world experience through the tough times before you even think about quitting your day job. And that's really the big idea we want to leave you with. Nick took a field that's so often run by pure emotion and gut feelings, and he applied a systematic, data-driven approach to it. It really makes you wonder, what's one process in your own life, whether it's work or a hobby, that could use that same kind of systematic thinking?
Today, we're diving into one of the most incredible turnaround stories you'll ever hear in trading. It's the story of Vince Koehn, a guy who went from an absolutely catastrophic failure to mind-blowing success. It really proves that sometimes the biggest market you have to conquer is yourself. So let's get into it and break down how a massive loss became the blueprint for a $1 million win.
I mean, just think about that question for a second. This isn't just about the numbers, right? It's about the psychology. How do you possibly recover from a loss that would completely crush most traders and then turn around and make it the biggest win of your life? Well, we're going to break down his exact playbook.
And there it is. This is the core realization that changed absolutely everything for him. See, Vince knew his technical analysis was solid. He knew his charts were right. The problem wasn't the market. It was the man looking back at him in the mirror. His entire journey just goes to show you have to master yourself before you can ever hope to master the markets.
So who exactly is this Vince Koehn? You might be picturing some Wall Street whiz kid with a fancy finance degree, but you'd be totally wrong. His story starts a long way from any trading floor, out in southwest Kansas, and it's built on a foundation of pure, relentless hard work.
Okay, so this is what's really crucial to understand here. Vince's character, his grit, it was forged way before he ever placed a single trade. He took over his father-in-law's sheet metal business with no formal training, and just through sheer force of will, turned it into a multi-million-dollar company. We're talking about a man who is not afraid to put in the hours.
And hey, if you need any more proof of his insane work ethic, get this. While he was running that business, he decided, you know what, I'm going to build my own airplane. From a kit, in his garage.
This was his actual schedule for 6 straight months. This isn't just a hobby, people. This is a demonstration of extraordinary focus and discipline, and those are traits that would become absolutely critical later in his trading career.
So with that kind of discipline already built in, how did Vince actually find his way to trading? Well, he started his journey like a lot of us do, right? He dabbled in penny stocks, tried out some options, but it just wasn't very fulfilling, and he was only kind of successful. He knew he needed a different game, and that's when he stumbled into the world of prop firms and futures trading.
But here's the thing. Success was not immediate. In fact, it was the complete opposite. He called it a vicious cycle. He'd buy accounts, blow them up. Buy more accounts, blow those up too. Over his first 4 years, starting back in 2017, he blew up literally hundreds of prop accounts. And the maddening part for him was he knew the potential was there. He could see the path, but he just couldn't get out of his own way.
So, what was this strategy he was trying so hard to master? Well, it all boils down to this one simple word: confluence. Vince learned pretty early on that if you're just relying on one indicator, you're setting yourself up for failure. His entire method is built on finding those sweet spots on the chart where multiple, different reasons to take a trade all line up perfectly at the same time.
And this just shows you how meticulous his process is. He starts with the really big picture, right? Marking key Fibonacci levels on daily or even weekly charts. He even color codes them so he knows how important they are just at a glance. Then he drills down to his trading chart, say a 5-minute, and looks for those big picture levels to line up with other signals. But the most crucial part is step 5. He waits. He doesn't guess, he doesn't anticipate, he waits for the market to prove his level is valid before he ever clicks that button.
So he had the strategy, he had the work ethic, and he was finally starting to see some incredible success. He had built up a profit of $350,000 across 20 different funded accounts. But then, a trip to Taiwan turned into the absolute lowest point of his entire career. This is where all that amazing progress came to a screeching, painful halt. And in a painfully short amount of time, it was all gone. Every single dollar of that $350,000 he had so carefully built over weeks and months just vanished. He liquidated all 20 accounts. He was left with absolutely nothing. A complete and total wipeout. So how on earth did this happen? Well, it was a perfect storm of both technical and psychological failure. I mean, he was in a totally unfamiliar environment, trading on a little laptop over a spotty Wi-Fi connection. But the real problem was internal. He fell right back into all his old bad habits, pushing trades he knew he shouldn't take, trying to front-run his levels, and impulsively chasing those crazy news spikes. He knew it was a recipe for disaster, and he did it anyway.
You know, some people might hear this and say, oh, well, it's just prop firm money, but Vince makes it crystal clear that is not how it felt. This was money he had earned, money he could have withdrawn and put in his pocket. The loss was absolutely devastating, and the mental journey back from a blow like that, it's almost unimaginable. He had to start completely over, from scratch.
So after he gets back to the US, Vince is still in this massive funk, falling right back into that vicious cycle of blowing up accounts. He was honestly on the verge of quitting for good. And then his phone rang. It was a call that lasted maybe a couple of minutes, but it would fundamentally change the course of his entire trading career.
So the call was from a pretty unexpected source. Daryl Martin, the CEO of Apex, the very prop firm whose accounts Vince kept blowing up. And Daryl didn't give him some new secret indicator or a complex strategy. The advice was brutally simple. He told Vince, look, you're not a bad trader. You make money every single morning. The problem is you give it all back in the afternoon. So just stop. Make your profit, bank it, and stop trading for the day. That simple, direct advice from someone he respected was the wake-up call he desperately needed.
So that phone call, combined with his own painful self-reflection, led to the single biggest strategic shift in Vince's entire approach. This was it. This was the light bulb moment that unlocked everything and put him on the path from that massive loss to $1 million profit.
So here was his revolutionary shift in thinking. You scale with accounts, not with contracts. Think about that. Instead of trying to hit a massive home run by piling a huge number of contracts onto a single account, he would trade many accounts at the same time, but with very few contracts on each one. This spread out his risk, and it totally changed the psychological game for him.
And this right here just brilliantly illustrates the power of this new approach. Making $500 in a trading account, that feels achievable, right? It's not some massive, stressful target. But when you do that consistently across 20 different accounts,
all of a sudden, that's $10,000 in a single day. He was just making base hits, but he was making them in 20 different ballparks all at the same time.
And the result of this new discipline? Well, Vince not only clawed back that entire $350,000 loss, but he blew right past it, earning a staggering $1 million in profit. And get this, he achieved this incredible turnaround in just under 5 months. So what can we all learn from this? Vince's first tip is to break everything down into smaller chunks. Let's say you have a $9,000 evaluation target. Don't even think about the $9,000. Just think about making $1,500 a day for 5 days. It makes the goal psychologically so much more manageable. And then, once you hit that daily target, your job isn't to make more money. Your job is to protect what you've made, just like Daryl Martin told him. His second tip is just a brilliant stress test for anybody out there dreaming of trading full-time. Before you quit your day job, run this experiment. For a few months, take your entire paycheck from your job and put it directly into savings. Don't touch it. Then, try to pay your mortgage, buy your groceries, and live your life only on your trading profits. It's a real-world test that will tell you very, very quickly if you're truly ready, all without risking your financial stability.
When it's all said and done, Vince Koehn's story isn't just about charts or prop firms. His journey proves that the biggest market we ever have to conquer is the one right between our ears. So the final question to you is, what's holding you back?
All right, let's get right into it. If you're serious, I mean really serious, about becoming a funded trader, then this is for you. We are going to break down the ultimate 10-step checklist that will give you a super clear, actionable roadmap to get you from where you are now to cashing that very first prop firm pair. You know, it's the dream, isn't it? Trading with someone else's capital, making a real living from the markets. But let's be honest, it is a tough, tough path, and a lot of people don't make it. The difference so often between the ones who succeed and the ones who fail is just having a solid plan. And that's exactly what this checklist is. It's your map to navigate the jungle and really beat those odds. So, here's the game plan. We're going to tackle this quest in 3 distinct phases. First up, we lay the groundwork by really getting to know ourselves as traders. Then, we get our hands dirty and forge a winning strategy. After that, we step into the final gauntlet, the pro arena. And all of this, it all leads to that one big goal, your first real payout. Okay, let's dive into phase 1. And honestly, this is probably the most important phase of all. Know thyself. Before you even think about placing a trade, before you think about signing up for a challenge, you have got to lay a foundation that is rock solid. You need to understand yourself and the world you're about to jump into. This whole phase breaks down into 4 key steps. And it all starts with some real, honest self-assessment. Are you a total beginner, or have you been staring at charts for a while now? From there, we'll figure out your tools, your timing, and your go-to tactical approach to the market. See how each step just builds right on top of the last one? Now, this is interesting because this isn't just about picking an instrument to trade. It's really about choosing your entire ecosystem. Over on the left, you've got CFDs. They're often way more accessible for beginners, right? You get higher leverage, you can trade smaller sizes. It's great for flexibility when you're just starting. Then you have futures on the right. These tend to appeal more to traders who really value that transparency and security because they're priced on a central exchange. Yeah, the contract sizes are bigger, so you might need more capital, but you're kind of playing in a more regulated, professional sandbox. And this slide really nails the next big decision, which is just as much about your personality as it is about your schedule. Day trading, that's for someone who thrives on action. You know, someone who needs that instant feedback and can handle the pressure of being in and out of the market every single day. That intensity, it just happens to be a lot more compatible with a lot of prop firm rules that say you have to be flat by the end of the day. Swing trading, on the other hand, that's for the patient strategist. It's for the person who can put on a trade, walk away, and just let it develop over days, maybe even weeks. You get a lot more freedom, but you really have to hunt for a prop firm whose rules will allow for that style. So the really crucial point here is to figure out your own psychology. Do you get a thrill from just riding a big, powerful trend, just going with the flow? Or are you more of a skeptic? Do you see a move that's gone too far and you just instinctively want to bet against it, trying to pick a top or a bottom? Look, there's no right answer, but knowing which one you are is absolutely key. Now, as a good starting point, a lot of pros like to trade breakouts. But here's the trick. They'll patiently wait for a little pullback before they jump in. All right, on to phase 2. See how this all builds. You've done the deep internal work. You know your style, you know your tools. Now it's time to actually forge your strategy.
This is where we move from theory into practice and build the actual skills that are going to make you profitable. This phase is all about action. 3 simple steps. First, you've got to learn a strategy that actually has an edge in the market. Then, and this is huge, you have to define in excruciating detail how you're going to manage every trade, both the winners and the losers. And finally, you have to prove to yourself that it all works by practicing like crazy in a risk-free demo account. Okay, before you even think about risking a single dollar on a challenge fee, you have to have a crystal clear answer to this question. Trade management is the thing that separates the amateurs from the professionals. Seriously, it's not about being right all the time. It's about making the absolute most of your winners and cutting your losers without mercy. Think of this slide as your playbook of options. Are you a one-and-done kind of trader? Take a clean profit, move on to the next one? Or do you like to scale out, kind of paying yourself as the trade goes your way? Maybe you're the type who's always aiming for those massive home run trades. And it's the same for losers. Are you going to use a super tight leash with a strict stop loss? Or are you going to give the trade a little more room to breathe? Your plan has to cover all of these scenarios before they happen in real time. This quote just gets right to the heart of it, doesn't it? Those challenge fees, that's your hard-earned cash. Why on earth would you risk it when you have a free laboratory to test everything in? Use that demo account to prove to yourself beyond any doubt that your strategy is consistently profitable. You want to master the simulation, so you only have to pay to play the real game one time. Okay, let's get into the final phase. You've done the prep work, you've sharpened your strategy, now you're ready to enter the final gauntlet. This is where you stop treating trading like a hobby and start treating it like a professional business. These last 3 steps are all about business. You need clear, realistic profit goals so you can actually measure your performance. Then comes one of the biggest decisions you'll ever make, picking the right prop firm to partner with. And finally, the step that separates the successful from the frustrated, you have to meticulously, carefully read every single word of their terms and conditions. So let me be really clear about step 9. You can be the absolute best trader in the world, but if you partner up with an unreliable or sketchy firm, you will not get paid. Your due diligence here is completely non-negotiable. I mean, we've all heard the horror stories of firms just shutting down overnight, taking everyone's fees, profits, and payouts with them. This checklist right here, this is your shield. You need to run every single potential firm through this list. How long have they been around? What are people saying about them online? Who's their broker? Is their customer service actually helpful when you have a problem? And maybe most importantly, do their rules even allow for your specific style of trading? You can't skip a single one of these points. You might be thinking, well, that's obvious. But you would be absolutely shocked at how many talented traders get their funded accounts taken away because they missed one tiny little rule that was buried deep in the terms and conditions. The feeling of passing a challenge only to lose the account over a technicality, trust me, you want to avoid that at all costs. And this slide perfectly illustrates what you need to be looking for. These are the tripwires. What are the specific payout terms? Do you have to trade for a minimum number of days each month? Can you even hold a trade over the weekend? Are you allowed to trade during a big news event? Knowing these rules inside and out isn't optional. It is essential for your survival as a funded trader.
And that brings us to the finish line. After all the self-reflection, all the strategy building, the endless practice, and all the due diligence, we finally arrive at the entire point of this journey, the whole reason you started this quest in the first place.
Let's end on this piece of advice because it is absolutely critical. It can be so tempting to just keep compounding your account at the prop firm, aiming for that huge scale up. But you have to remember the goal. Make it a regular, non-negotiable habit to withdraw your profits. A number on a screen is just potential. That money is only truly yours when it hits your bank account. So there you have it, a complete 10-step checklist to guide you on your prop trading journey. The map is officially in your hands. The only question left is, where are you going to begin? What's your first step going to be? Thanks for tuning in.